Morning all. How are we all doing? Morning Ladder, morning Themba, morning Diamond. Hopefully today we're going to get a little bit of relief on this Aussie. Finally. We will see though. We're up at 150 ADR at resistance at the minute on the Aussie New Zealand. So we need to crack this level. I'm not sure that we're going to do it today, to be honest. We're at 150 ADR, so I think you might struggle, but you never know. We've got 2 sessions ahead of us yet. We've got London and New York to go, so who knows? We've got no more news today though. If we get positive GDP figures tomorrow, we'll be off. That'd be lovely. So I'm 30 pips away from getting out of this. Not that I'm going to get out of it, actually. I'm going to stay in. But anyway, so lots of positive news. Morning, Jane. Morning, Stevie. Lots of positive news today. So first positive news is the market reacted positively to the Aussie dollar rate announcement, which is great. So that's good news. So we've got some strength on the Aussie coming through against the New Zealand dollar. Bad news is obviously we need some New Zealand dollar weakness to continue, but hopefully that will continue. Yeah, so that's all good. Second good news, remember I was doing a evaluation with Take Profit Trader, the new futures, well not new, a new one that I came across, futures trading company. I passed that yesterday. So there's my profit curve. So had a really rocky start, dropped $1,000 at the beginning, popped up 600, dropped $1,000, then had a couple of days to sit and go, whoa, then it got back on the swing of it. And so that's passed. Profit target's 53, I'm on 53.6. This is the last day today. So just got to take a trade today, basically. So I'll let you know how I get on with them. The reason I like these guys is you can withdraw your money anytime you like. They've got a fixed drawdown as well, which is lovely. There's lots of good things about this company. I think they're going to be an up and coming prop firm when they start getting into Forex. So that's passed. I also passed the evaluation for my Forex funds this morning. So I'm on stage 2. So 5 days on this one. The EA is running on this, obviously. So I'm just going to let the EA carry on trading on this and hopefully get me through stage 2. So yeah, that'll be another 100k under my belt by the end of next week. Should be very nice. Morning, Alex. Got past it yet, obviously, my Forex funds, but yeah, Take Profit Trader, I'm done. Although I'm not sure if I violated a rule or not. So they haven't got automatic rule violation, so I'm yet to find out about that. But we will see. I'll find out tomorrow because I passed today's last day. So speaking of that, one sec, I just need to flick over and close this position out because this position is me trading today. Done. So I can close that down now. Right. So obviously news overnight. We obviously had the cash rate. We had the RBA rate statement as well. So what they basically said is we've increased the interest rates obviously to 3.1, which we were forecast, which is great. It's a shame they didn't go a little bit higher, but they've done what they've done. They are expected to increase rates in the coming months. Inflation is too high. A further increase is expected. The size and timing of the increases will be determined by data and labour market, as we know. The path to this is the interesting bit. The path to achieving the needed reduction in inflation at a soft landing for the economy remains narrow. So, what they're saying there basically is, oops, we were going to go up to 3.25% or whatever it was on our last one. We didn't do it, and yet that really hurt. So it doesn't look like now we're going to get our soft landing. So it means for the Aussies, they're going to need to keep hiking interest rates, probably a little bit more than they were anticipating. But obviously the inflation figures need to carry on going. So, but all in all of this means that we should get continued inflation and continued interest rate rises for the foreseeable, at least the next 3 months, which means we should see a positive Australian dollar. So the market, obviously, when the news came out, reacted positive. It's not the biggest spike in the world, but it is a positive move. So it's a case of seeing really now how much they're going to factor in a rise. So the next rate announcement for the Aussies, I think they're monthly, or are they 6 weekly, the Aussies? They're monthly. So the next rate announcement is going to be January, beginning of January. So what you need to factor in now is from here until the beginning of January, which is up. Can't see it, but it's obviously over there somewhere. Let's say it's the edge of the chart. Job now is to forecast where they're going to go and how fast they're going to get there. Assuming that that is what the market is going to do, is factor in a rise. This is the biggest problem standing in front of the Aussie New Zealand at the moment, is this strong New Zealand dollar. And it's been strong for a while, and it's very, very, very much due a weakness. It's due a pullback and a profit take. So I think we've got a really good chance of this pushing. So my positions on this are basically all targeted to get out here. And that would make a very nice profit. So yeah, so that was news overnight. There was nothing much else. We had a little bit of rumblings from Japan, as we always do. Kuroda speaking, not anything particularly interesting out of that. It's going to take time to hit the goals. No comments on the Forex movements, usual stuff, they say. But hawkish, pretty hawkish. So yeah, it looks good. Looks good for the yen. So today we've got no more news. That's it. We're done. So business as usual today. GDP tomorrow morning. So I'm hoping, because I don't think we're going to get much further with the Aussie today. I might be wrong. You know, we do 200, 225 ADR days, don't we? But I've got a feeling we're not going to get a massive amount of additional movement on this Aussie today. We might do. I don't know. But, you know, where we are here, we're going to have to put in a 225 ADR. If the interest rates were higher, then I would expect, yeah, probably a bit more of a push. But we haven't hit ADR on the other pairs yet. So the only ADRs we've got is Aussie New Zealand and Aussie Swiss. So there is room for movement to the upside on these Aussies still. But obviously they tend to get manipulated the majority of the time during the Asian session. So, you know, I'm not anticipating a massive movement, but we will see. DAX is opened. No gap or anything this morning. Looking at yesterday, I'm just going to monitor this because obviously I just want to make sure the EA takes the first trade. Let me just open the VPS. So just want to make sure the VPS, the EA fires on the VPS this morning, because when you change accounts, auto trading gets turned off. And even though you turn auto trading on, sometimes EAs don't get the message. So I just want to make sure this actually fires. So yeah, DAX yesterday. So we're still not out of this range. Obviously, since the US. Oh yeah, that's a big opening range this morning, isn't it? Ugh. So we're still not out of the after the US drop. We had that little bit of accumulation, then we pushed up into this area of balance here. We're still not out of it. We are not able to get any move to the upside or the downside at the moment. The Santa rally, if it is coming, you better give the reindeer some food, because we're not moving anywhere at the moment. We are totally stuck sideways. We had an inside bar yesterday, and at the moment we are an inside bar on an inside bar. So it's obviously a massive accumulation here. So there's our inside bar. There's our range high and low. We're tight. We're really tight at the moment. But we had a down day yesterday, which is bearish engulfing. So we've got an inside bar on a bearish engulfing, which is bearish. So if we can get a break of yesterday's low, target would be previous day's low. And then if we can break that yesterday's low, we're off. And if we can get this low broken, I think we've got a really good chance of flushing hard. But we can't get out of it at the moment. So we're stuck. NASDAQ, very similar story, inside bar, bearish inside bar. There's still a lot of buying pressure here, as you can see. The S&P, same thing. We got a bearish engulfing on the S&P. We also made a lower low. So again, a little bit more selling on the S&P. And the Dow Jones, similar story to the S&P, bearish engulfing, and we made a new lower low. So there was a lot more bearish activity yesterday than there was bullish, obviously. So we'll see if we can get this continuation. But, at the moment, we're a couple of weeks into this no direction. So looking for rotation moves, paying close attention to highs and lows of the day and previous highs of the lows of the day, and obviously range highs and lows. So wherever we go, you want to be paying close attention to these. We're either going to break and flush, or we're going to break and reject. So it's not too difficult to trade at the moment, because it's either like yesterday, we break and reject, or we are just going to go out the bottom. But equally, obviously, we can do the same thing at the top. So just need to watch basically where we go this morning. We've got 10 seconds left to the close. Look at the size of this opening range. This is going to be awful this morning. I don't foresee a lot of money coming out this morning. Morning, Alex. Morning, Seymour. Okay, so orders are in. Oh, no. Idiot. I've got it set up. £10 risk because it was running on super conservative mode. Sorry, 336. Go 340. What? What did I just do there? Sorry, just what the hell's going on? Sell stop. Yeah, buy stop. It's like, I'm just going to have to manually do this morning. Hopefully that will trigger the second orders correctly. Should do. I knew there was something. I said to myself, make sure you change the risk parameters before you put it on the next evaluation. And what did I not do? Exactly that. Right. So we see how that goes this morning. That's not going to manage my trades, is it either? Hang on a minute. I'll be with you in a minute. What am I trailing? Break even 100, 200 trail. Whoa, one. Oh, where am I? Exit strategies off. Targets off. Right, there we go. Okay. We're in business. Right, yeah. So indices. Yeah, just need to see what happens with these this morning. Obviously, it can go anywhere it wants to. We might well just run the highs and then come back down. We may just push up a little bit, run the lows. No idea. Obviously, just go with price action. But certainly a lot of volume this morning. Hell of a lot of volume this morning. So yeah, if you look at this on the obviously the bigger scale, we're stuck basically here at the moment. So where we pushed up to last time, we got into that sort of balance for about a week. We're stuck here again. So the market doesn't seem to have any drive for a Santa rally this year, which isn't surprising, obviously, because we're in a bear market. But I'm quite surprised we're not actually doing anything. The fact that we've got the rate announcements all coming up next week, I think, is probably slightly hindering the market at the moment. They're not interested in anything particularly aggressive when we've got potential upsets like we've got next week. Lots of interest rates. The whole lot's everything basically but the yen is being released next week. So it's going to be a hectic one. I think we're just sitting in a holding pattern until we get there. S&P's rejected off of the trend line. So there's every opportunity for that to get taken out. Obviously, that's what they do with trend lines. They entice everybody short and then come take the liquidity. So there is definitely an argument for more upside on the S&P. The Dow, obviously, we've rejected the double top. We're putting in an M pattern reversal there, and we need to take that low out. Once that low's taken out, we'll get the reversal on the daily, and next leg can start. So, we're in exactly the same position as we've been. I feel like a real broken record at the moment. I've been saying the same thing for 2 weeks. We're waiting for next leg, and it's not coming. There's just no volume in the market at the minute. Second order in for long. Not a good. I hate these big wide ranges because it's if this fails at the highs, which I think there's a good probability it will do, you miss all of that movement before next entry. And by the time it gets down there, it's ready for a pullback. This is one of the disadvantages of the opening range breakout. If the first opening range breakout fails, you can basically, it's very difficult to make money on the day, which is not, it's just what it is, which is why I'm looking to pair this up with a mean reversion strategy. But I've got a bit further to go. That would be where I would expect us to get, which is sort of 20 pips away. We'll see what happens with that. Great moves this morning. I'm almost done for the day already. Excellent. Good job. Yeah, I think I'll probably get stopped out on this. I don't know. We'll see. We're only on an inside bar at the moment, so I like the fact that we got a little gap there. They want to come and fill that, and one of the worrying thing is it's really close to my stop, and that stop should actually be there. 20 pips from close, because the price action toolkit, is that right? Sorry, 20 pips from close. Yeah, roughly there. Price action toolkit works on tick, whereas the new EA works on candle close. So slightly different way of operating the trailers. Right. So looking at today, Aussie dollar Swiss ADR. Obviously, that's off the back of the Aussie rate announcement. So a little bit of a pull down and then huge push off of the back of the rates. Aussie dollar New Zealand is also an ADR hit to the upside. As you can see, that's just got a reversal off of 150 ADR and it's coming down. there's every probability that we may well come and retest this area. This is today's real key. When you get an interest rate announcement, either it is the right, excellent, they're going to increase rates, let's go, or it's the knee-jerk reaction, undoing, back to square one. So what I really want to see today is us close with a bullish candle, basically. So on a daily bullish close. What it does today intraday, I'm not really too worried about. As long as the market overall likes what it's in, we're going to get an outside bar bullish engulfing. That's the kind of, I just want to see it close something like that on the daily. That will give us at least a few days of strength, hopefully into next week. So if we look at the pullbacks on the daily, when you're in a downtrend, when you get a nice big bullish, so it's exactly the same candle as we've got here. Look. So it's an outside bar, bullish engulfing. Yeah. Market after that has a bit of strength. Now, it doesn't mean if it's long-term weakness as we've had, that's fine. So, you get nice big bullish bar followed by a bullish bar. We get some momentum. So the market starts to buy it up. That will kickstart a little bit of a buying frenzy. Now, whether it's going to be a continuation based on what they've seen with the rates, or whether it's going to be a similar sort of move, just a flag break, don't know. I don't care, because if it gets up to there, I'm out with a very nice profit. That's all I'm interested in. So I just want to see signs of buyers coming in so that it kickstarts that move. So those are your only two ADRs today. So I'll be a bit wary of taking an ADR reversal. I mean, it is obviously playing out at the moment. But I think if this is going to be bullish, the market is going to want to buy the Aussie up now. What we'll probably see is more of that today. Yeah, so we'll just sort of sit around the highs, and then tomorrow it may well dump and pump, or it could just pump straight away, but we'll see. So we're off. Second position enters DAX. So I'm going to be watching 144.66 as a high, and 144.83. Should have held on to my position in the futures account on the NASDAQ, because that will be pumping as well. Never mind. Yeah, so on my on that take profit trader account, there's a number of rules. One of the rules is you can't hold trades overnight. And there's also a consistency rule as well, which means that you can't have more than 50% of your profit on a single day. So I did $1,200 yesterday. I've had 700, 800 days, 400 day. I had a 300 loss. I had a 1,400 win. So that's 39% of my total profit so far. So I've passed that. So I'm okay on all the rules basically. But on Thanksgiving, I had a position open on the NASDAQ, which was 2 micros. And I went to close the position before market close, and the market had closed early. Now, on all my other futures accounts, if you have a position open at end of session, they close it, because they don't want to hold the overnight margin, because you get a huge margin call in futures. If you hold overnight, the margin requirements go up 100%. So that's why the rule in futures trading is you don't hold overnight. It's intraday trading. They didn't close those positions. So I've got a feeling they don't have an automatic close rule. And if that's the case, I've failed that rule, which would be really annoying, because it's 10 days I've been trading this thing and I've passed it on everything but that. So I'm going to wait and see what happens. I'm hoping it might slip under the radar. They might not notice, because the P&L looks absolutely fine. So, but yeah, anyway, we'll find out about that. Today's the last day, so when that hits 10 tomorrow, they'll be evaluating. I assume they do automatic evaluation, but anyway, we'll see. But yeah, I should hold that, shouldn't I? Okay, so big rejection on DAX up at the highs. Doesn't seem very strong this morning. It does seem strong, but there's a bit of rejection. Obviously, we've got wicks. We made a new lower high there. Obviously, we've got 2 minutes left on this candle, so if we can get a bullish close, that'd be lovely. But we haven't closed at break even. So if this candle closes roughly where it is at the moment, this second position will be moved to break even. Oh no, sorry, that first position will be moved to break even. I'm gonna have to do that manually because obviously the EA is not managing that first position because I did it myself. But the rule is we're 10 pips. Actually, is this working on candle close? I can't remember. Oh yeah, no, I am doing candle close. Yeah, sorry. Yeah, no, Price Action Toolkit does do candle close or tick. I've got it on candle close. Yeah, that's right. So yeah, that's doing exactly the same as it does on the other EA. That's fine. Cool. Out of interest, how have you found the withdrawal process of my Forex funds? Easy peasy, lemon squeezy. It's all paid through deal. So you basically you are a contractor for them, and you go into you set up a deal account. Who is they're kind of an escrow or a middleman for people who employ contractors. So I'm a contractor for my Forex funds. I go into my back end every 10 days, 2 weeks, and press the withdraw button, enter the amount, and it's in my account in the afternoon. Well, it's in my deal account in the afternoon, then I withdraw it from my deal account. It's easy. Apex futures have just moved over to deal as well. E8 funding used deal. Everybody uses deal now. It's just the way to do it. Well, it's going to stop out. Well, it's not going to stop out because we haven't closed 10 pips in profit. So trading stop will not have moved. It's a big old rejection candle. So let's hope this is just a pullback. I get the feeling though this is coming down. But I'm not going to interfere. I'm going to let the EA do its thing. That's the whole point of this. I'm forward testing to see how it actually performs in the real world. Yeah, it looks like the indices is rolling over. Trying to. It might be a pullback though. As I say, we've got this gap. I'll be surprised if we don't take that gap, in which case then obviously it's going to take my stop. But it does, it does. Then there's the rules, I'm sticking to them. Any charges? No, there's no charges. Apart from the profit split, obviously. Stopped out of the first position. It's annoying. $3.20 on that one. Ah, right, okay. Fine, sugar. That was the tiny little position, so I should have actually stopped out on that that one that I took manually, which I didn't do. So where's the stop loss on that position? Sorry, I just got to manually manage this. 14407. So we should be sitting here, shouldn't we? Okay, I'm going to manually stop these out. If this stop triggers on that position there, I'm going to manually stop this one out. Because that's where it should actually stop out. Should have actually stopped out by now, but I finished all the testing on the new EA yesterday on the DAX. I haven't done a data today. Stopping out. Today is data analysis day, so I will be going through everything today and figuring out exactly what settings I want to use with it. But all the results are positive, so yeah, it's all good. Right, so I can get. I don't know, that's a manual, isn't it? Yeah, I'm just going to let this go on its own. I'm going to have to keep an eye on that one. So, right. Anyway, so news-wise, obviously we've covered everything. There's no other news today to look at. ADRs we've covered. RSI extensions, same thing at the moment. We've got Aussie New Zealand on the 4 hour, which is just about to come out of extension. So that will be disappeared. Euro CAD, we have extended still on the 4 hour to the upside. So very strong moves on this euro. The Canadian dollar is obviously very weak at the moment still. That will all be changing tomorrow, fingers crossed. So as long as the CAD put in that 4.25 tomorrow or higher, 4.5 would be utterly spectacular if they put a 4.5 in. But as long as they honour that 4.25, we should see some strength coming through the Canadian dollar tomorrow. So if you are interested in getting long on the CAD ahead of that, the pound CAD as well is extended to the upside. These are very nicely extended. And we should get some decent movement off of those tomorrow. So it's obviously tomorrow afternoon. But these are pushing. So you could monitor these on M15 or an M5 for reversal alerts. And obviously take the next short on either of those. Pound CAD would be my preference rather than euro, because the euro is still pretty strong at the moment. So if the CAD does power up, you're going to get the strongest movement off of the pound CAD to the downside. Also potentially New Zealand CAD. So New Zealand dollar, if you look at the New Zealand dollar pairs, they've all hit a brick wall. So we've got the reversal alert on the 4 hour, lovely M pattern reversal there on New Zealand Swiss. New Zealand yen is halting. New Zealand US, we've had the reversal alert. New Zealand CAD is halting as well. So this is another one. The New Zealand dollar has been very, 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 very strong. We've now got to the point where it's starting to weaken and it looks like we're going to get a profit take move starting. So New Zealand dollar CAD is a good short as well as pound CAD, I think, at the moment. New Zealand dollar CAD isn't extended anymore. It has been extended and embedded. I'm in this one already. I'm just waiting for that reversal alert to come in. There's that area there and obviously that high there. So there's two areas. It's an area of accumulation and that propulsion gap there, which started to move. There's potential targets, I think, on a pullback. That is assuming it's going to be a pullback and push. If it's going to be a reversal on New Zealand dollar weakness and Canadian strength off of the back of the rates, then this could well start to come all the way down. So we will see. I've read there's a chance of the Bank of Canada under promising tomorrow. Have you? Where's that? I don't really read news, so I've literally follow what is happening. I'm not worried about rumors. Rumors are irrelevant. Rumors can start moves, but they very usually get undone. Financial Juice, Goldman Sachs. What, on here? If it wasn't red, I wouldn't have seen it. But yeah, I mean, they may well, yeah. I mean, if Goldman, don't forget everything that any institution like Goldman Sachs says is speculation, and it's often speculation in their favor. So if they say basically we don't think they're going to do the rates, that's fine. They're short. That means they're short CAD. Yeah, and they want everybody to get short CAD. Yeah, don't forget the manipulation of the market is done in many, many ways. So that's one of the things. Obviously, they will be saying, the same as the oil. They came out and said we're not targeting 100 now, we're targeting 90. Yeah, that's because you got it wrong, mate. They get it wrong all the time. They're human. They're human beings. Don't forget, at the end of the day, these big institutions are just run by human beings. Human beings are emotional beings, and emotional beings drive this market. This market is purely chaotic and random because of one thing: it's driven by humans. If it was driven by robots, it would be as efficient as possible. It would extract every penny to the tick perfectly. It doesn't do that. We have things like we had with the Saudis. Somebody released a fake news event, didn't they? Saying that Saudis were going to stop production on oil or cut their production on oil, and the market tanked. And then the Saudis went, No, we don't. We haven't said that. That's a total lie. Pop back up again. That's nothing to do with anything. Totally irrelevant move. But it's a human being said that, and another human being said that. That's why that happened. So when Goldman Sachs say something, they could have an insider. You never know. BOC preview, expect another 50 basis point hike, but under delivery remains a risk. Right. Yeah. What they're saying is they expect another 50 basis points hike. So they are expecting, I'm just reading this in the Telegram group. Alex has just posted in the Telegram group. They're expecting a 50 basis point hike, which is correct. Under delivery remains a risk. Of course it does. So does over delivery. Yeah. So what they're saying, it's a little bit like what I say every day, isn't it? Oh, what's going to happen today? Oh, I don't know. It could go up, could go down, but it's going to go through time. What Goldman Sachs is saying is they're expecting a basis point hike, but it could be lower. Yes, it could. It could also be higher. It's just speculation. Because they don't know. Obviously, if they did, they would be obviously milking it in that direction. But yeah, I mean, there's always the possibility. We've seen it, and then that's what we saw with the Aussie. This is why the Aussie crashed. Look, don't forget, this is why the Aussie crashed. We were expecting a 2.85. They delivered it at a 2.6. The market went, you idiots. Right there, they went, oh, really? You're getting ahead of inflation? You idiots. It's all that drives it. But yeah, we'll see. The reason I think, obviously, they're thinking it remains a possible is because they did it last time. So there is a possibility, but the probability, don't forget, that was back in October. So this is the first rate increase they've had since October. Yeah, so we missed November. They've skipped to December. So we've got 2 months worth of inflation figures now to deal with. Their inflation figures, I don't know what the CPI is for the CAD, but they're very high with their interest rates as it is, obviously, at the moment. And their inflation is still, as far as I'm aware, heading north. They've had a month. They've given it an extra month than everybody else to see what happens. I'd be very surprised if they don't do that. The only reason they would pull out a 4 is if inflation figures have flatlined. So let's have a look. Let's have a look at the CAD. Right, so we did have a negative. So we had a miss on inflation. So their inflation was a 0.7 off of a forecast 0.8 in November. So yeah, there is a possibility they could put in a lower interest rate figure, obviously, because their inflation is ever so slightly down on what it was. But it's a 0.1 miss. Yeah. It's still an increase. Yeah. So don't forget, when you get a negative figure come out, it's like inflation isn't as bad as they thought it was. And it's the same as us. We were forecasting 11%. We only got 10.7%. Yeah, but 10.7% is 8.7% above where they want it. So yes, it might have been a 0.7 instead of a 0.8, but that's still way higher than it should be. Way higher. So they've still got to deal with it. But we will see. There's no point in. I don't think there's any point in speculating on news. It doesn't. It really doesn't matter what people's opinions are. I don't think. Even if they're a big institution like Goldman Sachs, what they will do is they will react when that news comes out. They will change their positioning when that news comes out. Short on the DAX. So yeah, while we're talking about oil as well, or while we're talking about Canada, oil. So this is something else that's holding the Canadian dollar back at the moment is oil. So obviously major export. We have put in a new high. It's really, really, really struggling oil, and there's so many factors with this at the moment. I'm out, and I'm glad I'm out, because this thing's very, very, very hard. Somebody posted, I think it was Flo posted, or someone yesterday in the Telegram group, what the hell is going on with oil? You know, everything fundamental says that price should be going up. So why isn't it? Something's holding this back. There's massive tanker traffic jams in Russia on the Turkey border and things at the moment, because this cap that's just gone on with oil, with the Europeans saying we'll pay $60 a barrel for it, and Russia going, well, not from us, you won't. So now all the tankers are sitting at the Turkish border going, well, what do we do? Like, well, we don't want you because we only want to pay 60. You're coming in wanting to pay 77. So is this going to tank down to 60? I don't know. Russia certainly doesn't want to sell it at that. But at the end of the day, if you've got 3,000 tankers worth of oil sitting at the border, you can either have $60 for it, or you can send it back. What do you think Russia's going to do? I think they'll probably go, all right then, give us 60. I have no idea. But supply is restricted. Price caps are in place. Demand is going up because China's coming out of lockdown. So it all points towards higher oil prices, which is why Goldman Sachs is saying they see it there, and other people are saying they see it at 100. But you know, it's driven by news, and this is what we had yesterday. We had the negative news on oil, and you know, there you go. There's a tanker jams off the coast of tankers. It's yeah, oil tankers. Yeah. What did I say? Did I say lorries? Either way, it doesn't matter how you transport your oil. There's a problem. So yeah, it's difficult oil. I'm staying out of it at the minute. I don't think it's going to be very easy to trade oil, to be honest, until this thing with Russia is over, because this thing, obviously, as you can see, it's schizophrenic at the moment. It's like, yep, we've made a new high, brilliant. No, we don't fancy that. Okay, let's go from the range low. No, we'll make a new range low. Now we make a new high. The market structure is absolutely all over the place on it. So you pick a direction and you get out as soon as you can at the minute on this thing. There's a very high probability, I think, of it coming up into this gap again, definitely. So right now, I think it's a lovely little long. But, you know, I still fancy it high, but I really can't figure it out at the moment. So probably best not to. Second short on DAX. What's going on with Bitcoin? Just want to quickly check. There's an awful lot of excitement at the moment about Bitcoin. There's a lot of people, oh, you've got to buy it down here, which I think is massively dangerous. You know, trying to talk about catch a falling knife, you're going to get your arm chopped off if you try and catch this, I think. But anyway, I just wanted to see what was going on with it, because there was a lot of people, I was seeing a lot of buzz all over YouTube channels and all sorts of stuff about how it's the best time to be buying this thing because all the crypto billionaires are going bust, and it's leveling the playing field for the crypto market. And then you get something like this appear. UK has completed plans for crypto sector regulation. If you start regulating it, it defeats the object of crypto, which is anonymous. Pointless. So, we are not the first country to say that. So, if the entire world is going to start regulating crypto, I just really think it's days are numbered. This is the .com bubble all over again, and it's popped already. But we'll see. A lot of people disagree, but you know, this is why we have a market. If there wasn't disagreement, it would just go flat. You have to have disagreement for things to start moving, don't you? That's the whole point. If I want to sell it, you want to buy it, we've got a deal. Right. So looking at the rest of the RSIs, we've got Euro CAD, which we've covered. We've got Pound CAD, which we've covered. Aussie New Zealand. So we've got some hourlies as well. We've got the Euro Yen extended on the hourly to the upside. This is a lovely little short. Press a button. I like this a lot. Euro Yen up here. So continued strength on the yen. We should see continuation to the downside. So where we are right now, we've got this propulsion gap. This isn't a very good propulsion gap, actually, looking at it. So a propulsion gap, when it's formed with a propulsion candle, ideally should be breaking a resistance or a support or range, you know. So this isn't. This is here. That propulsion candle. It's not a propulsion candle because it's smaller than the preceding one. Well, I say that, it depends. If you're listening to ICT, who calls it a fair value gap, that probably is. I don't know. I really don't know. If you're following what I follow, which is what's called the wide range bar, the propulsion gap candle has to be the biggest out of the last three. That isn't. That one's bigger than that one. That is not an official propulsion gap. But either way, that is a massive propulsion move, and the sellers step back in again. So we've now invalidated that. But we're in a downtrend. Market structure is really, really obvious. Depends where you want to take it to. If we're going to get continued yen strength, that's a lovely looking short right there. And you should be targeting at least the lows. But, you know, if market structure is going to hold, you know, we're going to get a new low. So down here somewhere. So that looks lovely for a short euro yen. Euro's not the best thing in the world to be shorting against the yen, because I think the euro's probably going to have some strength, but it won't be stronger than the yen. So, you know, pound yen is probably a better one. Not sure what position that's in. Oh, that's even better. Look. Doesn't get any more textbook than support and resistance bounce than that. You've missed it. It was this morning. And the retest. M15. So take it on M15 and use the 4-hour chart. At least target those lows. So market structure, tricky market structure. That is there. That's a double top. So we're at least looking, if a range is going to form, we're at least looking at that. If not, we'll be looking at a new low. And if we break that, look out below. This is the pound. Every possibility that's going to happen. So that's extended on the hourly. So normally you would trade M5. You've missed it. It was right at the beginning of London. So I just want to get the DAX up on my other monitor. DAX is just pulling back a bit at the moment. Hopefully that'll hold. Got break-even stops on this. Come on, DAX. Let's get a runner, shall we, today? Just going to come up into here. This is what I've got the EA at the moment set to really aggressive, which basically protects your capital. So we get break-even stops in and trailing stops really fast. So we're looking for that sort of movement really fast out the gate. So I've stopped out. That's another short entry there. Oh, hang on, something just happened. Just a very fast move. So basically I've got it set really aggressive. The idea is capital protection, because obviously it's trading a funded account. The idea is I want to catch those ones that go like that, those fast, beautiful trend days. The choppy trend days like that, they stop out, unfortunately, like that. So meh. But euro yen, pound yen, which is why I've done all the research. Obviously, I've got that spreadsheet to go through to look at all the different variations, and I'm going to do some detailed back testing and look at the equity curves on them and all sorts of stuff today. So I'll be picking probably a slightly different variation of stock strategy to run on it. So euro yen, pound yen, yeah, that's a lovely short. If you go up into higher time frames, obviously you are just getting started on that on the hourly. That's a lovely support resistance level. We've come off. So pushed up, rejected, broke through it, accumulated, pushed up, rejected, pushed up, rejected, pushed up, smashed through it, rejected, rejected, pop. Good idea. US dollar CAD. Obviously, with all of this, just be aware of the news. So we've got Lagarde speaking there. There's nothing else affecting the euro or the pound all week. So either the euro yen or the pound yen are good looking shorts. US dollar CAD. Wish I hadn't got out of this one, but I did. So that's flown to the upside. We were waiting for continuation on this US dollar CAD. Waiting for that strength. You know, it took such a long time for the strength to come through on the US dollar. We had such a weak CAD. This thing just flip-flopped around for ages. Hopefully now we're going to get that movement going and come back up and re-challenge those highs. However, tomorrow we've got interest rates on the CAD. So if they under-deliver on that, if they do follow Goldman and under-deliver, bang, this thing's going to fly, isn't it? So if they come out on target, we should expect a bit of a drop. But I don't think we're going to get a massive drop because the US usually obviously is dominant over the Canadian dollar. So we will see. But yeah, that's a good looking extension to the upside on the hourly. So it's due a pullback. We've got lovely, this is a good propulsion gap here, this one. So, you know, there's a lot of downside opportunity on this. But obviously it's going to be just short term with potential movement back to the upside. So it's a nice scalp at yesterday's high. So we're just coming out of yesterday's high. So just taking the high liquidity from yesterday's high. That's a textbook stop run. Look, everybody, all these, I'm doing inverted commas with my fingers here. All the smart money traders shorted it there. All the smarter money traders are shorting it now because the smart money traders are dead. So yeah, potential good entry there on M5. Get that reverse alert in, and then look for a drop. Long way to go, as I say, somewhere down there or Asian high from yesterday. An ADR basically. And if it just flip-flops around up here, don't forget you've got the CAD tomorrow afternoon. If you take a trade with a stop, obviously, if you've got the CAD tomorrow afternoon, if you're not stopped out by then, and that rate comes out as expected, we should see a big drop on this. US dollar yen coming down very nicely against the yen. This is going to be the trickiest one to trade, obviously being the US dollar, which we are expecting to strengthen up against the yen, which we are seeing strengthen up. So a strong against a strong equals a range most of the time. So you're going to get these flurries on news and strength, and then you're going to get range. Bit of news, range, bit of news, range, bit of news, range, bit of news. So that's how that's going to play out, and obviously it's going to be very dependent on what happens with the news. They're both going to be strong moving forward by the looks of things. So, Jesus, DAX, what a morning! Look at that, hideous morning. Boo, $1,300. So hope we get better out of the New York session. Yeah, big whipsaw today. Horrible whipsaw. Look at that. Nasty. Can't trade that. US dollar yen. So yeah, covered all those. Anybody got anything else I want to look at? Any other pairs they want to look at in particular? Because I'm not going to cover everything. I covered everything yesterday. So that's all the alerts that we've got at the moment. Sagar, G7 insurance companies are not allowed to insure Russian oil cargo priced above $60. G7 insurance companies are not allowed to insure Russian oil cargo. Blimey. That's another sanction, I guess, they've put on. Expected to cause oil supply disruptions. So that's why we're getting those Turkey, those traffic jams. They probably can't move, can they? Just be careful with oil. I mean, if you're going to trade it, obviously the volatility, the beautiful thing about oil and and gold, the beautiful thing about oil and gold is this volatility. From a stop loss trading perspective, fantastic, because you get if you took this you had a reversal alert here. That's the low. So that was the reversal alert there. I mean, this thing didn't give you a reason really to get out for 4 days. It pushed, it accumulated, it pushed, it accumulated. You probably might have got out. You probably would have got out on that. Depends if you were watching it. If you weren't watching it, you wouldn't have been. Accumulated, pushed, broke, reversal alert. There's just not really an opportunity to get out, is there? And yesterday, if you had a short on it at any point yesterday and you weren't stopped out on it, it just gives you so much money, and it's so fast. But that in itself makes it very, very, very difficult to predict anything, doesn't it? Because you've got no clue where it's going. But it can make you a fair few bob if you can just get into it in the right place. And it's all about risk reward. Just get your stops in place. Ever thought of trying out a Vantage Point AI? No, never heard of it. Anything with the word AI in, I run a mile. You can't. There's no artificial intelligence can predict a random event. It's random. Movement in the market is 100% random. Software's predictive models can reach as high as 87% accuracy rate. Show me 3 years back testing with an 87% strike rate, and I'll buy it. Other than that, I don't believe it. I'm not being skeptical. It's just I've been doing this for 14 years. No one's ever shown me it. So if it exists now because technology's got to the point where that is the case, then fantastic. I'll stick 200 grand in there and I'll be a millionaire by the end of next year. But I'm not, and neither is anybody else, because I don't think anyone has done it. I'll tell you what, there's a this will make you laugh in a minute. Let me just go through the chat and I'll show you something very interesting. My brother-in-law nearly got conned. And I managed to get into a trading account and stop him just in time. But I'll show you what happened. Ever thought trying? Yeah, I'm on a gold short. Yeah, gold. I think you're safe on a gold short. I spoke about gold short yesterday, didn't I, in the live room? We looked at this level, and I said this is quite possibly the bounce point. And with the US dollar powering up, you should be looking for shorts on gold, because obviously it's just across with the US. We were waiting for US, and obviously yesterday it came down very hard, and it came down very hard at the same time as oil, didn't it? So there's, I'm not quite sure why. Is there much confluence? I do not have even looked at the confluence of oil and gold before. No, they're not that confluent. No, just happened to come down at the same time. US basically. So only take shorts on gold to avoid swap charges, at least earning something in this squeeze. Yeah, that's a good point. That's the marketing blurb from their website. There's no info there on pricing. You have to go through their marketing training session first. So there is I'll just quickly tell you this, because my brother-in-law sent me yesterday let me just get a telegram over here so I can open up some graphics. My brother-in-law sent me a thing yesterday about, he said, have you ever heard of this company called EOB Infinity? Has anybody heard of EOB Infinity? Basically, he was looking to invest. They're a PAM, a money management company, basically. Or money, I don't know what they are. Right? But their results this is their results. So they're a money management company. So what you have to do is you have to go and set up a brokerage account with with Trinity FX, I think it is their broker that they use, who provide copy trading services, and they basically trade for you. So he sent me all the results, and he sent me a nice glossy brochure, PDF brochure, and this is all their track record. So obviously, me being in the industry, he wanted my opinion on it, and I was like, right, well, that looks pretty decent. They're not making ridiculous amounts of money. They're not promising you the earth. They're doing a very decent return. So my first thought was they're position trading, because these sorts of returns are quite difficult, obviously, to achieve, but they were doing it. So I was like, right, okay, well, I'll go and check them out. So I went on to have a look at their website. There's nothing on their website that you can do at all. So then I thought, right, well, I'll have a look on my Forex funds. Not my Forex funds. What's it called? Where do you track? My FX book. So I went to my FX book, and I thought, let's see if they've got one. Did that come up with, hang on, my FX? There we are, right? So I thought I'll go and have a look and see if they've got a my FX book. And funnily enough, Triumph FX, which is their broker with a real US dollar account, they've got a my FX book. So first thing that rings an alarm bell is track record not verified. I was like, all right, okay. So I thought, well, let's have a look at it. That's a lovely equity curve, isn't it? Beautiful. Nice profit, all looking good. Good returns, 2021, 2022. And I was like, first thing I was like, right, okay, well, it stopped in July 21. Pop. What do you think? Pop. Immediately, you're like, it's gone bust. So I looked at their results. So you can see you've got 15. So January 21, we got 15%. We got 12% in February. January 21, 15%, 12% in February. So it's like, right, okay, well, these all stack up with the MyFX book monitoring. So I was like, right, all right, well, okay, well, that seems pretty decent. So I went and had a look at the order history. I was like, right, okay. So basically, the order history here looks pretty good. All the trades are sort of round about, half an hour, 10 minutes, 20 minutes, that sort of thing. So I was like, right, okay, well, they're scalping M5. Fair enough. 2.5 lots, excellent. And the strike rate is 87%. I was like, 87%. That's a lot on M5. Considering you're trading chop on M5, that is a massive, massive strike rate, isn't it? Lower time frames, we know strike rate is low because you're trading random chop. So I looked through this and I was like, okay, this looks a little bit too good to be true to me. Lots of withdrawals. And the fact that it stopped in July, I was like, right, well, they're obviously not using stops. So there must have been some kind of massive drawdown on it. But then I was like, okay, well, they've got no duration. So I looked at the risk of ruin, all the usual stuff. Had a look at the drawdown, 1.5%. So the maximum drawdown they've ever had is 1.69%. I was like, this just seems far too good to be true. So I looked into them further, found their Telegram group, which is here. And in their Telegram group, embedded miles and miles and miles back, was a login for the investor password for their account. So I thought, oh, I'll have a look at that. So I logged into their Triumph FX account, which is here. So it's that one here. Let me just move that down. So this is EOB. Can you see that? EOB Infinity PAM. Yeah, this is just an old MT4 of mine. So I logged into their account. Yeah, which is a live account. It says at the top. And then I looked at their account history. And all the trades are in there. So I started dragging the trades on. As you can see, I started dragging the trades on and plotting the trades on the chart. There's a euro US dollar, and this is up to date, 2nd of December 22. Goes back to 2018 with the initial 50,000 deposit. So it all seems to stack up. The problem is, you know, there's this thing called an MT4 server. I don't know if you're aware, but MQL5, the broker version of the MQL software of MT4 and MT5, is very manipulatable. And ICT got accused of this. There's certain things that happen in MT4 server when it's been manipulated that you can see, like withdrawals and profits appear with minuses instead of pluses and that sort of thing. So you can manipulate the data. Look at the date, the timestamps on the trades. I don't know if you can see this. This trade was opened on the 2nd at 10:43 and closed on the 2nd at 10:43. This trade was opened on the 28th at 12:54 and closed on the 28th at 12:54. This is the data that they're reporting on. How can you have a trade open and close at a different price, making $324 profit? Doesn't add up. So this data is bull. So I sent all this to my brother-in-law, and I said to him, I've logged into their account with their investor password. I've gone through their MyFX book. I've looked through, I exported all this data into a spreadsheet for him. This one here. So I stuck all the data in a spreadsheet. So I've got every single trade they've made. Obviously the times on these, 13, you probably saw if I zoom in, you see, look, 13:04 closed at 13:04 with a loss. 366 opened at 11:54, closed at 11:54. So unless I'm missing something, this data is not real, is it? This is what they're reporting their history on. They're saying, these are our trades. This is what we're making. So then my brother-in-law came back. He said, well, I've got two mates. One of them's put 10K in with them, and he got paid 1,400 last month. My other mate has got 200K in with them, and he's been earning $5,000 a week. He's just pulled the 200K out. So basically, I don't know what to make of this. It's 87% strike rate seems too good to be true. I don't know what you guys think, but that's a lot on M5. And the fact that we're opening trades and closing trades, this is their reporting. This is the investor password that they give you to verify that they are legit, right? So they give you this investor password and say, go and check our trades out. Log into the trade account, log into the master account. Well, if that's true, how can this be opening and closing at the same time? Not using a stop loss or a TP, and yet on all their literature, they say we only ever use a 1% stop on every single position. Well, there aren't any. So these are the and again, I don't know if this is a scam or not. I have no idea. You know, the only way to find out, and this is what I said to my brother-in-law, is go and give them 10 grand and see what happens. But this is the intricacy that some scam companies can go into to fake results. Yeah, and you can do this in MT5, MT4. You can set up a server account, make a fictitious broker account, and you can put whatever trades you like in there. I don't know if this is the case or not, and I'm not saying this is the case at all. This might be 100% legit. It's just, if this is 100% legit, why not just show us the actual entries and exits? Is there a reason why you won't show us the entries and exits? And they may turn around to him, because I've asked him to ask them the question and say, well, we don't show the exact entries and exits because that would give away our strategy. Well, I can plot on the strategy, I can plot the trades on the chart, and I can probably see what you're doing. Obviously, you're buying a retrace there, and I don't know, you could probably work it out. But this is, you know, just buyer beware. Whenever you're looking at anything that looks too good to be true, when you start digging into it, there's always these little things in the back of your mind that should be going, if this is actual real, why not put 200 grand of my money in here? Because it can return me 20 grand a month and I don't have to do anything. If that's the case, do you not think people like Warren Buffett would be all over these guys, buying the hell out of them? Because they're producing 200% more returns than Warren Buffett. And he's the biggest investor in the world, the most successful bloke in the world at investing money in the stock market and exchanges and everything. He can't do this. So why would they be able to? You know, so you've got to ask yourself these questions when you see stuff like this. You know, and the Telegram group has got 6,000 people in it. And, you know, it's just performance reports, basically, which is, you know, absolutely no problem at all. You know, performance reports, performance reports. I just don't, I don't know whether, you know, it just seems too good to be true, doesn't it? It's not taking very many, like six entries a week. And it's not making a lot of profit, which is good. This is all, you know, this is all what you should be doing, taking A+ setups, taking small profits. But you know, everybody can, I can do that. I've had 100% weeks, but they've been claiming to do 83% or 85% or 87% or whatever it is for 3 years. Either they've found the Holy Grail, or this is one massive, very complex and very impressive scam. I just don't know what the scam is, because apparently his mates have been paid by them. The only thing I can think of, if it is a scam, is that basically what they're doing is they pay you, they pay you, they pay you, they vanish. Or they tell you that, oh, we've had a really bad month, we've lost, and they use that money to pay the next load of guys coming in. They've got a pot of cash and they pay some people out, a little bit like the premium bonds or the lottery. I don't know. But anyway, I just wanted to show you that, because I logged it when I saw it. I was like, yeah. Immediately, he sent me this brochure, and I just replied back to him with a big smiley face and said scam. And then he came back and said, well, my mate's just done it, and he's just been paid $1,400. And I was like, right, okay. Then I looked, when you go into it in this much detail, you know, I don't know the reason behind this. This is the question mark for me. If this is legit, and this is what they're claiming, this is the master account that your trades are copied from. If this is the master account, why is it false? Why is it not right? My P&L doesn't show that. I've never seen a P&L that shows that. So anyway, I just wanted to you know, I'm not saying these guys are legit. I've just never heard of them. I've been around for a long time. And I think if there was a PAM out there, that every PAM in the past I've come across, money manager in the past I've come across, has been a scam. And you know, it's just, I think they've got a bad name. But these guys might be 100% legit. I don't know. But I'm pretty sure if they were, they'd have come across my radar. The amount of forums and groups I've been in my life, I've never heard of them. You know, but Rocco, you know, anyone can do this. If you've got an MT4 server, anyone can set up this. You get an EA, right? You make it run with an EA, and all you do is you go into the MT4 server and delete out the failed trades, delete out the losses, leave a couple in there to make it look legit. That is what I would suspect. If it was to be a scam, that's what I would suspect it would be. Something like that. But you know, I don't know. But anyway, I just thought I'd run through that with you, because I found it's interesting to dig into those things. Dax is a hideous beast this morning. Does my brother-in-law know how lucky he is having his own quant? Yeah, looks and sounds scammy. Looks fishy. Is there maybe a chance that the time is not copied correctly from the master? I don't know. I don't know how to do. I don't know anything about copying from master account. I know about trade copying. Obviously, I do it, but I don't know what they mean by a master account. That's surely their MT4 trading account, isn't it? But the thing is, to sign up, the only way you can sign up for this is through an affiliate link to the company, which is Triumph FX, right? So there's an affiliate link to Triumph FX. Yeah, this is the broker. And the other thing that I said to him was, right, this is a trade copier, yeah? So they have this thing which is community trading. which is basically you can copy other traders. Yeah. So I look up EOB. I've looked up Infinity. I've looked at all various versions of their names. They don't exist in here. And their affiliate link to here, it basically says how to get started in the brochure is click this link, affiliate link to this Triumph FX company, sign up with a broker account, deposit your amount in the broker account. So the first thing is they're getting a kickback on every single trade that's taken. Yeah. Then they will set up the trade copying onto your platform for you. Well, if they're doing that and they're that legit, then why the hell aren't they a provider in there? You know, it's all. You know, it's just, maybe I'm just over cautious because I've just seen so many scams. But I mean, I might be wrong. But anyway, I've said to him, go and have a check. If he comes back to me and says, you know, January, February next year, yeah, I've just got 3 payouts from him. Fantastic. But you know, think about putting 200k in here and then it vanishing. It's just, well, all right. They're a regulated broker as well, so it's not as if they're a con broker. They are a regulated broker. Triumph. Yeah, they're Seychelles. They're regulated, so the broker's legit. Not, I've never heard of them, but I mean, doesn't mean they're not legit. There's loads of brokers out there, loads of tiny little brokers out there. Maybe post a screenshot of the trade history on their Telegram group. You can't post on the Telegram group. So I've said to him, you know, he's got to ask direct. But there are scams that start off paying out and then ask for more and lose it. Yeah, but you know, you have to ask then, what about the trade history? But is this manipulated? You know, if that was a tick, I'd be like, all right, but it's easy to put something up there that isn't verified, scam results. You know, this is why this is here. Why, if you're that legit, why have you not got a tick? And also, they've got 2 others. Look, EOB Corporation, which is a similar sort of thing. That only ran for 2020. And then you got Hub 322, which is running on a demo account. Now that is more like what I would expect to see. That's an equity curve. That's a proper equity curve. Yeah. So yeah, that you know, maybe that's what they were trading. They're extracting the good trades. I don't know. This is verified, but this is a demo, and it's a different company completely. Anyway, there are scams. Yeah, the payouts are also quite strange. Like it's max 1 withdrawal a day, and timings. Yeah, the timings are definitely. When did his mate make 200k out? Should be able to see that as well. No. His mate deposited 200k into the broker. Yeah. They traded on his account with the copy trading system. He was getting the profits back. He was making 3 or 4 grand a week, which he withdrew from his account, and then he drew the 200k out of his Triumph FX account. It's just a broker account. This is just a broker. It's like me depositing into Forex and drawing out again. Yeah. It's just that these guys are trading on your account for you. Yeah, I mean, it could be a scam, bro. I don't know. I mean, the fact that they're regulated in the Seychelles, a lot of them are. A lot of them are. Doesn't mean they're a scammer. It just, I don't know. And you know, and I said to him, you know, these guys, if you look at their products, they're fund management. So these are the PAMs. They got a list of PAM. Yeah, see. But they're trading accounts. a 500 to 1 leverage. So, you know, my first question for a PAM that has got a maximum drawdown of 1.89% or whatever it was, why the hell do you need an overseas broker with 1 to 500? Because you only go overseas to get leverage, right? If you don't need leverage because your max drawdown is only 1.38% or whatever it is, you just use Darwinex and get 1 to 30 in the UK. You use a UK broker. You only need to go overseas if you need leverage. Otherwise, if you're trading with a stop, you don't need anything. More than 1 to 30 is more than enough. Which is why the regulation is there. 1 to 100 is absolutely fine. So they can't turn around and go, oh, we need a high leverage broker. And, you know, and this is why he's asking me, because I know all this crap. He hasn't got a clue. And I'm like, well, why are they going overseas for a broker? Why have you got to use a Seychelles broker? Why don't you go with a regulated broker in the UK? Then at least you know your money's protected. And he's like, well, I can't. I've got to use these guys. Let's just say, smell the air. There's bullshit around. You know, so I don't know. Anyway. It was interesting. So I'll let you know if he does it or not. If something seems incredible, it's probably not credible. Yeah, exactly. It's my first instinct whenever I see anything is it's too good to be true. Prove me wrong. That's basically the way I work. Because you know, everything in this world is a scam. The internet's done a lot of things for us, but it has created a massive amount of scam. Success like that would attract big money and it would disappear from public eyes. Exactly, yeah. If I was Warren Buffett right now, and this came across my desk, and they could prove a track record to me in an account that I could log into with live account credentials at a broker that has been regulated and been around for 15 years, if I was Warren Buffett, I would pay these guys £10 million a year to manage 10 billion of my funds. Because they're going to return me 400% in 3 years. Why wouldn't you? Warren Buffett ain't doing it. I'm not interested. That guy knows what to do with money. You don't use stocks. Trustpilot showing recent reviews saying not getting withdrawals from Trump as FX. Okay. Here we go. Let's have a look at Trustpilot. God, why is there so many? Let's go with the biggie. 26%. These are big scammers. Yeah, okay. I'm going to send that to my brother-in-law. Thanks for that. No response from them either, is there? Normally, oh, here you go. Oh no, there's not replies, are they? Yeah. Yeah, I'll send that to my brother. Yeah, but the CB withdrawals should shows as well in the P&L statement. They do. So the withdrawals, yeah, no, they do show in the P&L statement. Yeah, they do. Look, the balance. Growth is different. Growth is your growth is your. This is what you look at. Your balance is obviously your trading balance. So they do show the withdrawals in there. They basically take out looks like take out £5,000 at a time. £5,000 withdrawal. 5, 6. But this is all manipulatable. You know, you can do. I don't know how to do it, but I've seen videos on YouTube with people basically proving the fact that you can manipulate MT4 accounts if you've got MT4 server software, broker software. I don't even know how they get it, because you can't get it unless you're a broker. So there's obviously hooky versions of it or whatever around. But this is all manipulatable, and the fact that the broker that you don't get a choice in broker. You have to use this broker. In fact, this broker is going nuts at the minute. Yeah, I suspect we are right. It is a scam. Why only this amount all the time and so little? So basically, what they do is they make a withdrawal every month. So it's in their brochure. There are withdrawal dates. I think there's a calendar. Hang on, I'll find it in their Telegram group. So the way they work is they only pay you every month. You don't get a choice on when you get paid. And again, it's all like, well, it's a broker account, right? How can you control when I get paid? It's a broker account. It's my account with a broker, or is it? I don't know. This is all, you know what I mean? It's just too many questions. Too many questions. Here you go. Oh, no, that's not. So I was just flicking through the Telegram. I saw something about paydays, basically, and it gave you all the paydays for the year, and they coincide with this as well. You know, it's all too squeaky clean, and you know. But my brother-in-law, as I say, he knows nothing about it. So, is your trading? If your trading is working, why make signals or make courses? Well, people do make. I don't know why you make signals. No. But courses, you know, pass it on. Basically, if you find something that works, pass it on. Let other people try it and see if it works for them. That's basically what I do. If it works, it works. If it doesn't, it doesn't. But yeah, signals are just a waste of time. You know, let's say, for example, this EOB Infinity was legit and you went with them and you stuck 200 grand in there. You're making 20 grand a month. You're like, hey, I'm living the high life. I'll give up my job. I'm going to go and live in the south of France. And then all of a sudden they go bust and disappear or something, or the bloke that is actually trading gets run over by a bus. Oh, hang on a minute. I'm not earning any money and I've got no job. Well, should have learned to trade then, mate, shouldn't you, rather than following people's signals? What about the bloke that's running those signals, goes out and gets absolutely hammered on a works do, comes back in the morning, instead of pressing 2.5 lots, he presses 25 lots, and that trade is one that goes wrong and loses you 70% of your account. Oops. You know, don't ever put your faith in somebody else. Learn to trade. If you want to do this as a job, following signals is never, ever, ever going to make you money. Might do short term if you can execute and get the same trades, but long term, it's not going to work. But yeah, robustness, as OO has just said, is yeah. If you're going to pick a strategy, test it to death, and play the long-term edge. Admit defeat. You are going to get losses, and just don't expect a Lamborghini, and you'll be fine. South of France is a good choice. Yeah. I was waiting for that as well, actually, Ladder. When I said it, I was like, I bet he says something about it in a minute. Afternoon, Profster. Morning, even. So yeah, so if ever you come across these guys, I don't think they'll be around for long, to be honest, anyway. But if you do come across these guys, yeah, run a mile, or don't, or stick some money in with them and let them prove me wrong. I'd love to be proven wrong, yeah, because I did all this spreadsheet for him. Max win was 1,200. Max loss was that. If you'd have dumped 50 grand in there when they started in 2018, 2020 in August, you'd now be sitting on 195 grand. Yeah, 2 years. It's not a bad return, is it? Funnily enough, that's pretty much what my new EA does. But my new EA, I've back tested to death 50,000 times. Robustness tested it over a 4-year period, and it does that. So I shall be using my own product, thank you, because I've got faith in mine. I never use anything that I don't know how it ticks. You know, all these EAs on there that you get an aggressive, a moderate, and a unaggressive, conservative mode. They're the only 3 inputs you've got. I'm never going to put that on my chart. I've no idea what it's doing. I have to know the mechanics of everything that trades on my chart, which is why I build it myself, because I don't trust anybody else's, anything else from anybody else, because it's money. You know, just like giving 10 grand to a bloke walking down the street and saying, can you go and put that on black or red for me? No, I want to put it on black or red. At least it's my decision. I lose my money or win it. Anyway, yeah, so there you go. Word of warning. Russia's deputy PM Novak, Russia might reduce oil production. Yeah, I'm not surprised, mate. If you can't flog it, I wouldn't produce it. You've got a load of tankers queuing up at Turkey at the moment that can't land. So yeah, you better stop producing it, otherwise you're going to pop. Not good, is it, for Russia? At all. All depends how cold it gets in Europe and whether or not they need to buy it. Morning, Lee. What do you think about SMC and the supply and demand thing? Also, the point of interest, order block. I don't know. A lot of people say that this is the same thing, same theory, isn't it? In effect, this is I don't know, my indicator. This is why ICT moaned at me, because he was saying I ripped off his strategy. I don't know. Smart money concepts. I've had this conversation in here before about smart money concepts. The fact that it's now called smart money concepts, plural, means there are more than one of them. What is smart money concept? What is it? Yeah, you know, there's so many things out there now that talk about smart money concepts. Supply and demand is very simple. Supply and demand is just support and resistance. It's an area where prices reacted. Yeah, they will call that a demand zone or supply zone. I call it resistance. They'll call that the same thing. I call it resistance. They'll call that the same thing, which I call support. Same thing. So call it supply and demand. Supply and demand sounds cooler, doesn't it? It's just a point that the market has moved to before and moved away from because price discovery failed there. Call it what you like. Same thing. A liquidity run, stop hunt, whatever you want to call it. It's the way the market moves. It gets exhausted because there's not enough people selling anymore, and then it pushes back up because they need to take profit on their positions, becoming buyers. Call that smart money concept. I call it market exhaustion, profit taking, liquidity run. I don't know. It's all the same, everything. Go out and do 50 courses, come back to me and tell me what's different about any of them. None of them are different. They all talk about exactly the same thing. At the end of the day, none of it works because the market moves where the market needs to move to. And sometimes that'll work and sometimes it won't. This thing is called a wide range bar. Some other people call it an inefficiency. Some other people call it a fair value gap. At the end of the day, the bloke that invented this, way before any of these other people started talking about smart money concepts, called it a wide range bar. I've always called it, before I even knew about a wide range bar, a propulsion candle. It's all the same thing. It's a move. It's all the same stuff. This, you know, it does the same thing. This indicator, a lot of people from ICT come and get the indicator because it does apparently what the order block theory is, which I don't really understand because I didn't get it. But to me, it's market structure. This is what this is for. This is to tell me when market structure is potentially shifting. If this is part of smart money concept, then I love it. I don't know because I don't do smart money concept. I don't follow I don't do it. So I can't really answer that one. The trick is when to press the button. Buying when going down, selling when going up. No, that's not smart money concept, Astro. That is mean reversion. That has been around for over 100 years. Mean reversion strategy. Go and read anything. You know, this is my point, and I've labored this point many times before. Smart money concept is buying when it's going up and selling when it's coming down, right? That's called mean reversion. We've been doing it for years. There's the mean, there's the reversion. That is the entry. Stick a Bollinger Band on your charts if you want to know about mean reversion. That's mean reversion. This is the mean. That's the reversion. There's a smart money concept in there, I guess, at play somewhere. Oh, there. I don't know. It's all the same stuff. It's all the same stuff. The only thing you need to worry about is that, as far as I'm concerned. We know we move through time. We know that price goes up. We know that price goes down. We have no one in this entire universe can tell you when it's going to do the up or the down. Not in our control. By the way, in regards to the EA, would you share the testing Excel with us? Yeah. I will do that. Won't make any sense to you because you won't know what my input settings and acronyms and stuff is. And to be honest, I don't really want to sit there and go through a lengthy process of documenting my data. But I'm going to do a video on the EA and I will go through all the data testing and robustness. You know, and I'm assuming this is going to work, yeah? Because don't forget, this is all back testing. Forward testing, this might not work. I don't know. I've back tested it to death. I've robustness tested it to death. So you stick this on a live chart. It's lost $1,300 this morning. But I know it does that because I've seen it in the back testing. It loses regularly because it's a strategy and they all lose regularly. It's not going to work every day. But the days it works, it absolutely cleans up. But you need the right market conditions. Like this is totally wrong market conditions for a trend EA, a trend breakout EA, which is basically what it is. This is mean reversion. This is smart money concept, I guess. Yeah, be shorting it now because our opening range high 2 is in, which is 1.5 hours, which is typically the range for the day. So I will be shorting there, looking for a pullback into this wide ranged bar. Propulsion candle. I don't know. I'm too old to learn new stuff. 10 degrees today, Diamond. Bloody hell, you're lucky. It's going to be 2 here on Wednesday tomorrow. Simply put, smart money concept is buying when going down, selling when going up. Yeah, so it's just mean reversion. The trick is when to press the button. Yeah, and that's exactly the trick, isn't it? There is nobody that knows when to press the button. You can press the button whenever you like. Whether you're wrong or not is not in your control, and you've got a 50-50 shot of being right or wrong every single time you press the button. And as soon as people accept that, that's usually the light bulb moment. It's like, well, I've got no control over this, so I might as well just. I'll get in now. I'm going to do this with a 0.25 because I do actually like the setup. But my odds of this working is 50-50. I'm doing this on the funded account, which is why I'm only using 0.25% risk. Liquidity grab, order block, supply demand, market structure. Yeah, it's all the same stuff. I don't know. The order block theory is that's the bit, to be honest, when I started to try and do ICT stuff, I got confused. I just find it really overcomplicated and difficult to understand. Market structure, I get the concept of. It's just basically the market coming back down. You know, it's because I understand what goes on in the banks, because I know people in banks. I understand the why, and I think that's the bit that nobody knows in retail, because that's not what they teach you. They teach you about indicators, they teach you about various things, fundamentals and stuff, but they don't teach you about the why. Why did that do that and then do that? It's because the banks drove price down to find liquidity so that they could trade it back up and make a profit with it. When you see things doing certain things, you know something's coming, because you know the mechanics behind the reason for the drop is not for any other reason than to go and find liquidity so that they can make money with it. And this is the stop hunt. But where how big is a stop hunt or liquidity run or whatever you want to call it? There's no answer. It's totally different every time it's done. There's probably an average. I mean, there's always an average. There's always a mean, but knowing that doesn't help you, which is I've completely proven with the new EA. Yeah, I've run 8,000 variations using different stop losses and trading stops, and they all become profitable. Which one do you use? It doesn't matter. Sometimes you're going to win, sometimes you're going to lose. There's no one that's better than any other. Yeah, if you use a 10 pip stop or you use a 20 pip stop or a 30 pip stop, you're going to get different results. Which is the best one to use? Don't know, because that time it was only 5. So all of them, it doesn't matter. Really doesn't matter. You just hit the button and get it. Look at that. And just there's your propulsion gap test. So whenever you're trading, the only thing you need to be asking yourself is, where do I think this is going? When you press this button, right, the timing of your trade is either right or wrong. Yeah, that is out of your control. Where it's going next is either up or down. That is out of your control. You can think, and this is where supply, demand, support, resistance comes in, you can think it's probably going to come and retest the lows. So if I'm short here, I'll watch for price action down there, but I'm not going to take it off if it slams through, pulls back, and then drops again. I'm going to leave it. But if it pulls back and pushes up, pulls back and pushes up, I'll get out. Or I'll get stopped out. Those are the two things in my brain right now. That's all I'm thinking. I think we're probably going to come and test these lows. The opposite is we are now sitting in this propulsion gap pushing higher. So my thinking now is, where is market structure next? So market structure for me is now either that, or it's that. So that is wrong for me. That is right for me. There's only two things that are going to happen, and I've just described both of them. What's my odds of this working out? 50-50. I have no idea. I couldn't tell you, because I'm not the bloke sitting at the bank market maker desk now, pressing the long and the short button. I can see that he just pressed the long button with a massive order. And I can see at the moment that a load of buyers have just added into that order. Whether or not there's more sellers in the next 10 or 15 minutes, I haven't got a clue. What's happened here and here has got nothing to do with what's going to happen next. What the moving average on the DAX is doing on the daily chart right now has got nothing to do with what is going to happen in the next 15 minutes. That's trading. Whether you call it smart money concepts, you use my indicators, you use ADR, you use price action, whatever it is, your odds are the same every time you hit the button. You just need a way to get in. And, that's what smart money concepts gives a lot of people. The reason they buy into it is because it's called smart money. But the banks don't do that. That's the thing. It's all based around people call it, this is there's one at CTI, the guys at CTI run something called bank level trading. They don't know what the bank levels are. The banks don't know what the bank levels are. They don't exist. It's just a concept. It's just a made up name for a way to find a buy or sell button press. It's how you manage the button press after it's happened, how you manage the trade after the button press is done. That's the only thing you have any control over. So right now, I'm watching this thinking, am I right? Am I wrong? I don't know. Can I close it? All I can do now, because I'm on board the train, is I can either press that button, I can modify my stop, I could move break even. If I placed an ad on it, I could put a break even average in it. This is the control I have over this trade now, is that. Where it goes is, it's nothing to do with me, is it? I'm on a roller coaster, there's no brakes. I can jump out without hurting myself now. I could jump out there and have a broken leg, or I can jump out there and go to hospital. Or I could jump out when it finally stops. and get out and walk away and go and buy a new suit. Those are my options. People need to relax more about their entries. It's the least important thing. No need to document, but I am just interested in the data. Yeah, I can give you the data. I need to go through it all first. I just need to sift through it. I've got so much data on the new EA. It's like, I don't know. I've probably got 400,000 to 500,000 lines of data to sift through. It's not going to be a fast thing. Astro creep, it's going up. Yep, it's going up now. But no, this is the other thing, like, and this is, I read this bloke in the Telegram group the other day. Weeks ago, he posted something saying something would go to a certain location, and then he bragged about it and was like, "Ha, I told you." It's like, oh, well done. You got a call right. Excellent. You had a 50-50 shot of it working. Well done. But it's like people say to me, "Oh, what's your thoughts on gold?" What? From the next candle? For the next week? On the 4-hour chart? It's like time frame. It's going up. Astro Creep has just said it's going up. It could well be. I haven't got a clue. Neither of you. No one has. So yeah, it's going up. If I get out here, I'm right. You're wrong. It's gone down. If I get out here, you're right. I'm wrong. It went up. Yeah. If I leave this until this afternoon, when it's tanked out the lows, and we put in the biggest candle we've had for the last month because the bear market continuation is starting, you're wrong, and I'm going to go and buy a car. It's all like, it's not going up for the day, it's going down for the day, I reckon. But that's my point. That is why this market exists. If you don't think it's going up, and I don't think it's going down, this thing goes sideways. For this market to be in existence, we have to have people with opposing opinions. Right? That's what drives this market up and down. Nothing else. Banks have human beings working for them with opposing speculative positions. That is why this has done this today, for no other reason than banks have been moving money around in the market with a speculative desire to make money. You think it's going up for the day. I think it's going to close as a down day today. Doesn't matter who's right. I will make 2 grand, you will make 2 grand. I will lose 2 grand, you will lose 2 grand. I have no control over who's going to make money or win money. And in my opinion, having an opinion is the worst possible thing you can do, because I'm not having to go at you here, Astro. I'm just saying that you are now going to be doing nothing but buy this all day long. If this thing drops, right, let's say the market structure and this does this all day, right? Because you are long, you'll be buying that and that and that and that. Even though the market is telling you in no uncertain terms this thing's going down, you're going to keep buying it. Because you are thinking today, we're closing up. We're having an update today. Even though for the last 3 days, this market has told you in no uncertain terms we're coming down, today, no, it's going up. Yeah, you would take a loss and step down, exactly. Yeah, bias is a very, very dangerous thing, because bias makes you, obviously bias, makes you press one button only. Yeah, if when this market opens, it pushes up and then pushes down with that much force and then pulls back and puts a bearish candle in, I'm going to hit the sell button. Even if my bias when the market opened 15 minutes ago was long, my bias is now switched short intraday. And this is the point about intraday, and this is in the, what I'm planning in this, not a course, but this video I'm going to put together on scalping, is my kind of rules for scalping. You cannot have a bias, because it doesn't matter. What happened yesterday has got 0 impact on today at all. I can prove it to you 1,000 times. Right? Why did that do that? Has it got anything to do with that? No. Why did that do that? Has it got anything to do with that? No. Why did that do that? Has it got anything to do with that? No. Right? Why did we get an inside bar there? There just wasn't much movement. Why did we get an outside bar there? I don't know, but has it got anything to do with that? No. It went up and it went down and it stopped in the middle. If you were long, you made money. If you were short, you made money. But you had to be long and short at the right time. It's got nothing to do with anything. What happens with price right now is the only thing in scalping that you need to be interested in. Is it putting in a bullish or bearish structure? And is it looking heavy or is it looking bullish? It doesn't matter. You follow, you press the button, and I'm pressing the button because I'm seeing lower lows and lower highs. Yeah, we put in a high, we put in a low, we put in a lower high, we put in a lower low. What does it look like? Bearish. Is it going to continue to be bearish? Don't know. Black or red, 50-50. I've no clue. That's all I know. That's all I know right now. But I know if it is going to be bearish, I'll be looking for this propulsion gap to get filled and the lower of the day to be tested. If it isn't going to be bearish, I'm going to get stopped out. Simple as that. That's all I know right now. If we suddenly put in a higher high and a higher low, and another higher high and another higher low, and another higher high and another higher low, I might decide to get out and go and have lunch and not take a full loss. But again, until it does that, I don't know what I'm going to do, which is why you have to be glued to your charts as a scalper, which is why it's my least favorite form of trading, but unfortunately the most profitable form. But you can't automate this very easily. You've got to be able to just do it. It's discretionary. Because it is just, luck. A lot of it. Is illegal in the US? Is it real hedging is illegal in the US? Yeah, FIFO rules. It's not FIFO, is it? It's first in, first out. It's hedging rules. You can't hedge. Astro, big candle up. People short it, so it consolidated, took liquidity on both sides, and then went against sentiment, i.e., up. Yeah, if that's what you think. That's what you think. But that's the other thing you got to think about, right? You say big candle up, right? I say big candle down. Last candle. Perspective. The participants making this thing move up and down right now are not. You don't know whether they're trading the 1 minute chart, the 5 minute chart, the 10 minute chart, the hourly chart, the 4 hour chart, the daily chart, the weekly chart, monthly chart. No idea. The other thing you've got to think about when you're scalping as well, especially on the stock market, is the guy at Barclays right now is sitting on the dealing desk, and he has got right now 20,000 shares to short in S&P. He's got a guy that wants to get out of his S&P positions, so he's going to have to short 20,000 S&P shares. SAP shares, right? When's he going to press the button? Don't know. But when he does, this thing's coming down because SAP is the largest percentage mover on the DAX. You have no idea what's sitting on that guy's desk. So right now, it looks bullish. That's because somebody just bought a load of BMW. But the guy hasn't executed his SAP trade yet. See my point? That has got nothing to do with where it's going next. If it did, it would go up and it'd just keep going up. Yeah, price has to turn all the time. We're just accumulating at the moment. My thoughts are today is we've just taken the liquidity of everybody that has hit the short button. That's what this move was. Now we're going to accumulate and drop. Somebody else's opinion is that we've just liquidity run everybody that's short, and now we're accumulating ready to go long. And that is why the market moves up and down. You don't believe people move the market? I have to disagree with you 100%, and so does everybody else in this room. And if they don't, they should leave. Who do you think moves the market then? I tell you what, I know for a fact because I know one of the blokes that pressed the bloody button. Don't believe people move the market. You're a conspiracy theorist, surely. Who moves the market then? Hang on a minute. You've done, yeah, aren't you a smart money concepts trader? Part of smart money concepts, I think, I might be wrong, is herd mentality. Steve Malraux, who is the god of smart money concepts before other people came along after, one of the parts of his course is about herd mentality and how the banks are the leaders of the herd. They press the buttons, the human beings. The human beings program the algorithms which move the markets when we're in the Globex session. Humans. There's a really good series about trading, which is the BBC, I think it's BBC or Channel 4 produced. I can't remember what it's called. But it shows you a prop desk in a big bank in London and all the human beings trading in there. Humans don't move the market. It's the most ridiculous thing I've ever heard. Sorry. I'm not picking on you. That's wrong. Profs are aliens. Yeah, you quite might be right. Half of the people on the planet might be aliens for all we know. We might be sitting in the Matrix. I don't know. Do you believe the Bank of England would allow people to move the pound value? No, definitely not. They can't. Nobody in retail can move the market. The amount of money it takes to move a tick in any market is way beyond us mere humans. We did it. I was in a massive group. I was in a massive group trading group once, and we all pressed the button with huge position size at the same time. Nothing happened. No, people don't move. No, oh, Astro, you're confusing people. You're confusing retail traders with institutional traders, right? My friend, I say he's a friend, he's not a friend, he's a trading colleague, used to work at Barclays, okay, on a dealing desk with a load of other human beings, and their job was to move the market and execute orders on behalf of their customers. The people that were speculatively trading, the prop traders, and on the investment desks, who were using the bank's money to make money, speculative trading, same as you and me, were humans. Yeah. This, I haven't got my ladder open, but the futures traders in the banks and institutions are human beings. If that were true, they would never lose. You're talking yourself into a corner here. Do you know how much bankers make? Do you know how much commission they earn? Because they don't lose. I think you need to go and do a course on fundamentals and go and I don't know what you would search for. Go and do Boocamp. Go and do the first video on my Boocamp. I explain exactly how it all works. They don't use a stop loss. Exactly right. Yeah, exactly right. They don't. That's exactly right. The market is moved by institutions and banks dumping large orders, which makes these candles, right? They don't use any of this, right? What the banks see is that, yeah, they see price. There is nothing here that is interesting to them at all, apart from this line, right? And their job for the day. So they come into I'm not going to go through it in full detail because it's all in the Bootcamp. But the guy comes in the morning, looks at the order book and says, right, how much money we got on the order book? And he goes, yeah, we're long at the moment, 1 million. And they go basically, okay, brilliant. Take it long today and then get out somewhere around, I don't know, I'm going to pick a number, 374, 375. Take it up to 375. And he will take it up to 375. He will execute orders based on what the commercial desk has given him, right? So the commercial desk will have a load of orders to execute on behalf of large corporates. Those corporates will want to do hedging transactions. So they want to be buying something. They want to be selling stock. The pension funds will want to be moving stock around within the pension fund. They'll have a basic, same as you and me. We go into work in the morning and you sit down at your desk and go, oh, God, I've got 25 transactions to execute here. I've got a load of dollar. I've got a load of yen. I've got a load of stocks to execute. Okay, well, let's start off. We'll take some stock long. And he executes 2.5 million. We tick up. Yeah. And his job is basically to move this thing up to there, get out with a dollar amount, and then he passes it over to New York and says, okay, we're up here. We're pretty much flat, build an accumulation. You take it whichever way you want. That's how it works. I know that because I know people that have done it. I know people in the banks that have done it, been there, sat there at those desks and pressed those buttons. They're human beings. If Barclays push it up there and Lloyd's come in twice as hard as Barclays, the guy on the Barclays desk will not make any progress, and he will do what is called a puke, which is he will exit those positions with less profit than they were anticipating by getting to their 375, right? He will exit those positions and he will go short with Lloyd's. There's 10 banks that move the vast majority, 90% of this market. And they have no care about you, me, or anybody else. We are just orders sitting at liquidity points for them to go and extract cash from. Yeah, that's how the market works. That's what drives it, which is why it doesn't matter whether I press the buy or the sell button there, because the odds of me being right are in no one else's hands but the banks. And at the moment, I'm lucky enough for the banks to have hit the sell button with me. I'm going to break even that just because I can. That's it. So when you next are going onto any platform that says, well, when it gets up to here, you need to definitely hit the sell button. Your stop needs to go exactly there. Da, 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 da. That's absolutely fine. That's a reason to enter a trade. That's a system, a strategy. I've got loads of them. But what happens when that button is pressed? It doesn't matter. It's how you manage this after you've pressed the button. I can now walk away with 0.1. If I do that every time, I will be a losing trader. What I should be doing right now is that, adding to this position, because I'm right at the moment. When I hit the button, I didn't know if I was going to be right or wrong. I'm right at the moment. I'm just about to be wrong. I don't know. Maybe I'm not. I don't know. No one knows. But it's how you trade after the event is how you make your money. Yeah. Let's cancel that pending off. But it's definitely. I can assure you it's people that move this market, right? So when this is why you have good and bad traders, right? Trading. Someone's just mentioned Anton Krill, Seymour. Yeah, watch Anton Krill on YouTube. Yeah, if you want to know more. Anton's sat on the same desk as my mate sat on. And it's people, very much people that move this at the banks. Yeah, you get on a prop desk on an investment in an investment department in a bank, you might have 15 desks, right? The competition for those 15 desks will be somewhere in the region of 8 to 10,000 applicants want that desk. Coming out of university, there's 15 of those. The guys that sit on those desks are earning 2 to 3 million a year. If sitting on that desk, you do not produce a positive return, you are out and one of these guys is in. Yeah. Every single person sitting on those desks is a human being with emotions, and they have enough money in their bank account to move this candle. Can you imagine sitting in a desk right now and me being able to hit the sell button and knowing for a fact when I do that's going down, as long as the guy sitting next to me isn't doing the opposite with twice as much leverage as me? When I push that button, like prime example, right? That trade I just took, yeah. Why did I get out of that? Because of my human emotions. Me. I got out of that. Whether I'm managing a $20 billion portfolio or a 50K funded account, the reason that trade executed there was me. It's gone down. Am I worried about it? No, I should have stayed in it. Never mind. Next trade. Because where it's going from here, I don't know. I haven't got a clue. I'm not going to get in now because I can't really see any reason to. But the guy sitting on Barclays' desk, right? He just took a break even on a $25 million position. If he'd have stayed in it, his emotions are now something he needs to control to not revenge trade and hit the short button there and then get stopped out for a $50,000 loss. It's a human being, but it's a human being with the possibility of pressing a button to move that thing. That's the difference. So, you know, there's algorithms. Obviously, everybody knows there's algorithms running. Banks have got quants running all the time, but they are running microtransactions. I haven't got Jigsaw open, but if I could show you a heat map of the actual market, you will see the orders sitting there, and you will see the quants executing the orders at the micro level, and they are, you know, the quick trading algos that we will never be able to beat because they have access to the liquidity before us. You know, if you put in the futures market, if you put an order in the futures market at a certain point and you're 700th in the queue, when it gets down to 1 in the queue, if a big bank comes along, they jump the queue because they're the liquidity provider. You can't beat them. Yeah, there's a lot of stuff that goes on. You've got to understand what goes on under the hood, I think, personally, because if you don't understand what goes under the hood, you've got no idea. If you're just following candles, you should have gone long there. You shouldn't have gone long there because market structure is telling you that we're going down. Yeah. So I'm looking for a new low. So if you hit the sell button now, I think there's a very high probability you'll be right. But you'll only be right down to there, maybe. You might be right down to there. I don't know. So I mean, no one knows. If I hit that now, is it going there, there, or there? I don't know. Crystal ball's broke today. That's why they don't lose. They're going to draw down for a long time. Yeah, so you're talking about not using stops as well, which is what I do, position trading, which is what my bootcamp is all about, position trading. They don't use stops, but that is their that is not their everyday dealing desk, prop desk, if you like. That is their investment desk. So their long-term positions where they don't use stops is using the same strategy that I use in position trading by dollar averaging into positions. But the difference is they are always on the right side of it, the vast majority of the time. Why? Because they can move it where they want it to. But big institutions are doing scorecarding and fundamental analysis. Yeah, so they have the spreadsheets running, which do all the fundamental analysis. They're keeping on top of every single interest rate, right? And they're giving a scorecard to every interest rate number to show a positive or a negative bias on a currency or a market. So they are doing that, and they're trading in line with fundamentals, and the fundamentals are right. This is what these moving averages are. The 24 and the 72 moving average are the fundamental institutional, if you like, moving averages for quarterly and monthly reporting. So when these things are doing this, this is the direction the banks are in at the moment, right now. But it doesn't mean you should be going long. Because right now, over the last X weeks, the banks have been long. What has that got to do with what the banks are doing tomorrow? Nothing at all. Just because the banks have been long there does not mean they're going long now. Can you time when the banks are going to change direction? No, neither can I. The only person on this planet that can do that is the bank. So when you hit the button now, you still have a 50-50 shot, regardless of which button you press. That's the thing that everybody has to understand with any system or strategy or anything they do with trading. There is nothing you can do to control where this is going, and where you get in is irrelevant, because what's going to happen next is totally irrelevant to what happened last candle or this moving average. You know, oh, it's above the 200, we should be going long. Why? Supply and demand tells you to go short. You know, every single thing, every indicator is going to conflict with each other. Yeah, supply and demand is a short. right? Moving average on 200 is a long. The 2472 is telling you to go long. Yeah. People that trade volume profile will be told to go short here. Who's right? I don't know. Doesn't matter, does it? What you do when you press that button is your responsibility, and you will be right or wrong depending on where the market goes next. You know, and this is what people say to me: what's the strike rate of your reversal indicator? I don't know. It depends on the time frame, the instrument, when you're awake, when you're asleep. There's so many there's so many parameters as to whether or not this is going to give you a strike rate of 50 or 80 or 20%. You know, there's no right or wrong. But Anton Creel, if you want to find out about a lot of the stuff that goes on in those banks, go and watch Anton Creel's videos. He's great, and he sells a course. So I've done his course, and it's brilliant. But does it help me on 5-minute charts? No, nothing to do with it. Doesn't help me one iota. Yeah, the market, mate, you're talking about, and Astro, you're talking about if they go into drawdown for months, years, they don't make the market. There are multiple desks in a bank, and each desk has a different function. The market maker desk is there to provide liquidity. Yeah, their job is to keep the market moving and make the market move, which is why it's called the market making desk. Those people only will impact intraday traders. Prop desks are there to produce money. Investment desks are there to manage long-term hedge fund positions. They will be looking at monthly and quarterly returns on moves. They won't be using stop losses. They'll be using portfolio approaches to generate alpha. You know, looking for a 3 to 5% a month return. They hedge. Yeah, they also hedge funds. People have a misconception about hedge funds. So I'm just opening up my futures platform because I saw someone talking about volume profile. You know, hedge funds, people assume that hedging is buying and selling at the same time. It's not. A hedge fund's purpose is to transact in one direction on behalf of an organization to hedge against their business. Yeah, that is what a hedge fund does. A company in Japan exports goods to the USA. From receiving raw materials to selling finished product takes 3 months. Yeah, they buy a lot of gold because they manufacture electronic components. So what they do is when they purchase gold, they take a hedge in the other direction on gold, so that if gold moves in the wrong direction, their hedge will make money while their stock loses value. That's a hedge. Nothing to do with trading in two directions, like hedging. That's not what hedging is. A hedge fund will only ever trade in one direction, and it's to hedge against. Corn is the biggest one. Things like corn and seasonal things. So corn, you have a harvest, right? So a farmer has a corn harvest, and he is expecting in 6 months' time, right, that when he harvests his corn, he will make 1.5 million from the sale of his corn. He will take a hedge on the corn market in case the price of corn drops. He will have a hedge placed for the same amount, so that if corn drops and by the time he sells it, it's only worth 1 million, he will have made 0.5 million on his short hedge. Hedge funds manage this based on what the expectation of the company is for future profits. That's a hedge. Anton Creel explains all this very well. But you don't need to know any of this. If you're trading a 5-minute chart, it's got nothing to do with anything. I'm sorry, I've just realized I've drawn all that over here and you can't see it. I should have drawn it over here. Anyway, but that's what happens with hedging. But someone's just talking about volume profile, Chris. So this is a volume profile. Yeah. Yeah, this is basically what most of the bank traders are using to execute their positions. Yeah. So they're trading volume profile. So this is where the vast majority of the transactions have been placed today. Yeah, this is the highest volume. This is the lowest volume. This is your supply, demand, and demand zones, if you like, for the day, or as we call them, value areas. Yeah, so this is the value area low. This is the value area high. Volume weighted average price. And this is basically the volume profile. So there's 4,400 contracts being executed at this price on the NASDAQ. This is the NASDAQ. This is the S&P over here. But this is what the vast majority of the banks are looking at. Can you see it? I mean, I've got candlesticks up. They're not having this. They're looking at this. That's all they're interested in. Yeah. So they can hit a button here. And this explains how humans drive the market in much more detail. These are the numbers of contracts available at these levels, right? So there's what, 2, 4, 6, 8. Let's say there's 100 contracts sitting here right now. If I press the buy button here with 200 contracts, right, there's not enough people here selling 200 contracts. So I have to then take these guys, these guys, these guys, these guys, and these guys' orders. So price moves up. So now we're trading up here because I executed 200 contracts long. That is what the banks are doing. This is why these things go up and down. Depending on what time frame you're looking at on this thing, you're going to have a completely different perspective. But it has nothing to do with what is going to happen next. Because what's going to happen next is I'm going to exit my 200 contracts here so that I can make that much money. There's also a guy sitting here that's going to execute 5,000 contracts short. I just don't know it yet. But when he does, that thing's coming down here. It's got nothing to do with anything that's happened before. What this guy is going to do when he executes his 5,000 contracts is the market's coming down. I don't know when he's going to do it because I'm not him. Human beings are doing this. Sorry, I didn't want to labor the point, but you need to understand how this thing works. It's very important. So there's 15 guys fight each other. The 15 guys are on the prop desks you were talking about. They're not fighting each other. They're doing their job. They're making money for the bank. That's their job. But if they don't do their job well enough, and another guy, think of me sitting here as a retail trader, right? If I have 5 years of P&L producing 15% a month, and I walk into Barclays Bank and I show them my P&L verified results with my broker for the last 5 years, and there's a guy sitting on that desk producing 10%, do you think the bank's going to be interested in employing me? Yeah. That bloke better be good. Because if he ain't, I'm here. Yeah, so not me, I mean anybody. The banks are in it for one reason only, to make money for their shareholders. And the way to do that is to manipulate the market. And there's lots of other things going on as well. A hedge fund has got a massive short contract, right? So let's say, for example, US dollar yen. One of the hedging desks, investment desks, has got a hedge to execute short for, 50 million US dollars. If he tells the prop desk when he's going to execute that 50 million short, do you think it's in the interest of the prop desk to hit the short button at the same time? Because the prop desk is using the bank's money, he's using a customer's money. They've both got the power to move it down. So if they both push the button at the same time, the prop desk gets out with a profit. That guy gets liquidity. Win-win. And this is what market manipulation is, yeah? When people talk about the markets being manipulated, it's not being manipulated for any other reason than it has to be manipulated for transactions to take place. Banks can't collude and all or a decent number press the same button. Yeah, banks, you can't have insider trading, which is what I've just explained, in theory. And you can't have banks dealing with each other. That does go on, though. And they're being fined for it all the time. You see banks being fined all the time for doing it. There's a load of guys got caught in a Telegram group. They had a Telegram channel. Interbank had a Telegram channel, and they I can't remember who it was. One of the big banks, City or somebody, got caught, and they got told off. And they got a slap on the wrist and a $25 million fine. Do they care? No, because they made $250 million out of it. It's only 25 million. We've made 250 of them. Doesn't matter, does it? It's a cost of doing business getting caught. Frozen orange juice contracts, Trading Places, one of my favorite films. Yeah, frozen orange juice contracts. It doesn't matter what you're trading. It's the same principle. Yeah, if you've got one bloke here selling it at this price, and you've got a bloke willing to buy it. If this guy is selling it and this guy is happy to buy it at that price, and there is a queue of people happy to sell it at that price, and there's a queue of people happy to buy it at that price will stay there. Yeah. As soon as these guys run out of stock, we have to find someone else that's selling frozen orange juice. And the next guy's selling frozen orange juice up there. So price will move up. And then everyone will start buying their frozen orange juice at that price. Yeah. When we run out of buyers for frozen orange juice, the guy selling his frozen orange juice at that price goes, well, I can't sell it at that price. Maybe if I try it cheaper, more people will buy it. So price comes down. And then we find a load of people that want to buy frozen orange juice at that price. This is a stock market. This is where people are buying stocks. People are happy to transact stocks up here. We've run out of people up here. So everyone's selling their stocks is going, oh, hang on, what about here? 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 Oh, we've got a load of buyers here that are happy to buy it. Accumulation, distribution, accumulation, distribution. Is that a smart money concept? I don't know. Accumulation, distribution. Is that, who came up with that? I don't know. Does it matter? It's all an overcomplication on something which is very, very simple. Up, down, and sideways. Is that 30 minute of volume profile? No, volume profile is volume profile. This is since session start. This is since the open. This is the Globex session. So this is the volume since Globex. This is a 5-minute chart here. So I have a 5-minute chart. I have a 5-minute chart, an hourly chart, and I don't know if I've got my. There you go. So that's my setup. Futures. Only trade a Nasdaq, ES, and Dow. But this over here, I'm looking for support resistance. So I'm interested in where we're probably going to find some supply and demand, support and resistance. I'm interested in propulsion gaps. There's not one there. There aren't any propulsion gaps. But I'm interested in propulsion gaps. That's a massive one. Because obviously I'm looking for buying out of propulsion. And on short time frames, I'm looking for propulsion gaps again. So we're in a propulsion gap here. This whole thing is a propulsion gap. But this is what I'm focused on most of the time. I'm focused on highs of days, lows of days, highs of recent highs and lows. And I'm focused on value area lows and value area highs. So just collude all day. Yeah. Is it, you know, is what I mean? It really doesn't matter what you do. What you know, if I, you know, hit the sell button, I have no clue it's going up or down, but I know that if I get out there or there, I'm either going to make 70 at the low of the session, or I'm going to lose 56 at the high of the session. One of those two things during New York is going to be achieved. That's what I know for a fact. I can tell you for a fact, New York will break today's Globex session high or low. I have no clue which one, but this one makes me 75. This one loses me 56. Is that a good trade? Yeah. My risk is 56. My reward is 75. But I don't know what's going to happen. Neither do you. But that's all the control that you have. I'm an S&P guy, but I also dabble in the Russell. Yeah, I used to trade the Russell. Russell's a lot more jumpy. 2,000 stocks in the Russell. But they all do the same thing. So if you want a volatile one, I prefer the Nasdaq. So the reason I trade these three, right, and think of it this way: super fast, normal, slow. So there's 1,300 contracts executed up there. That's the point of control. Point of control is where the most orders are executed, contracts are executed. But this is slow. I like the Dow because it moves slower and it also moves out of sync with the other two a lot of the time. But all the indices tend to move in conjunction, so it doesn't matter which one you use. It really doesn't matter which one you use. They all kind of do the same thing. This one just does it faster than the other two. Fake broker call. Yeah, it probably was. I get them all the time. All the time. By the way, I really appreciate this talk, even though we have distinct points of view on several topics and equal on others. Everyone's opinion. This is what drives the market. Opinion. Yeah. The reason this is going down is because at the moment there's more people with the same opinion as me. I don't know when their opinion's going to change. I reckon it's probably going to be down here. But you know, it doesn't. I don't know when it's going to change. Why do they allow retail to see their orders? Because it's a centralized exchange. It's a fair. I believe bring up a heat map. So this is their orders basically. So you can see their orders sitting there, and there's a load of orders sitting there. So there's a load of orders sitting there. But it's a centralized exchange, and this is why you know, people that use volume on their Forex accounts are just battling a losing war, because there is no centralized exchange for Forex. In futures, we have a centralized exchange. This is the Chicago Mercantile Exchange's data feed. Every person on the planet, whether they be a retail trader or an institution, is seeing exactly what I'm seeing. They're seeing exactly the same orders in exactly the same places with exactly the same volume and exactly the same volume profile. They're seeing every single order executed exactly the same as I am. Yeah. In Forex, you just see your volume of your broker. And if your broker's only got 10 clients, that's not really a good representation of what the volume in the market is actually doing, is it? It's useless because there's no centralized exchange. The only volume you see is what your broker is executing. So you can't use volume profile in anything but futures because there is no centralized volume for anything but futures. And they don't allow people to see the orders. It's just, they're just there. There's no, it's just what it is. It's a level playing field, which is why a lot of people trade futures, because you are literally on a level playing field with the banks. I can see the bank's orders coming in over here. I can see every order coming in. I can see every large order. When this thing lights up like a Christmas tree, when the market opens, and I see like 200s in here and 400s and 500s in there, I know those are banks. Why? Because I haven't got 400 or 500 contracts to dump short. If I went short 200 contracts now, every single one of these ticks would be worth $400 or more. I can't do that. because I haven't got a big enough pocket. So when large orders come in short, when we see this thing light up like a Christmas tree red with big block orders, I know the market's short, so I go short. But it's a totally different way of trading. See, I just made like $20 here. Look, I'm just going to close this out. Just made $18. But I had no idea whether it was going up or down. It doesn't matter, does it? I either win or I lose. There's obviously things you can give yourself an edge with. Like, you know, we knew this was going short, didn't we? That's why I went short here, because I saw the structure as short. I got out and I got broken even stopped, which is why I say don't use break even stops, because they break even and they stop you out of the winning trades. But you know, that's it. That's it. That's all there is. Up, down, sideways. That's literally it. Oil, bearish flag, Seymour. Sorry. Waffling. No, oil's in a tanking again. Oil tanking. Made a joke. Yeah, so need to be obviously wary of the low. The market structure on this is just so out of whack with the fundamentals. It's unbelievable. But we're in an expanding range now, which I hate with a passion. So there is every possibility we're going to touch the expanding range low. Again, this is somebody else's strategy. It's not mine. This is, I didn't make this up. But you know, if I'm a forecasting man and my job as a trader is to manage risk and forecast where price I think might be going, it's either going to come down and it's going to hit what people call supply and demand or support and resistance, or it's going to come down and hit a trend line, which would be part of an expanding wedge pattern, if you like patterns. I don't know. But if I'm going to go short now, TP1, TP2. If I'm going to go long now, stop under the low. And I'd be looking at targeting either there, or somewhere up there. That's a really bad line. Be somewhere like that. 85 a barrel, I would say, because that is the next resistance, which are old supply and demand zones which didn't work. You know, and this is why, you know, every strategy has a failure rate, because nothing works 100% of the time. Which is why whenever I see these 85% strike rate, people like we were talking about with this EOB Infinity this morning, you can't have an 83% strike rate for 4 years. That's utter rubbish. Unless they, like I said, maybe the Holy Grail exists. I don't know. I haven't found it, but 83% strike rate month on month and a 10% return every month without a losing month for 4 years. Nobody I know has ever achieved anything like that. So either these guys are gods or they're scammers. I know where my money's put. Futures is better than Forex since order volume and less on currency. No, futures is different to Forex. Do you recommend learning resources to trade futures? Not free. You need to pay for futures education. There's a lot in it. You need to understand how the contracts work. I wouldn't recommend futures. It's much more complicated. Futures is scalping. You are scalping. When you're trading futures, you are scalping ticks. There, this is a tick. Every one of these is a tick. In fact, every one of these is 3 ticks, because this is a contracted view, because the Nasdaq moves so fast. It's just I compound my ticks into 3 ticks at a time, so it doesn't fly around too much. But it's a totally different game. It's not easy at all. A lot more difficult. Yeah, I showed you my, you know, this is my futures account. This is this one that we're trading, and I've just traded on now. This day I had here where I lost $1,000 happened within 10 minutes. Yeah, it moves so fast sometimes. You've got to be so careful, and it's a lot riskier. you're better off not doing it. You're better off trading Forex, learning Forex. It's slower, it's more organized, structure's better. If you want to be a scalper though, yeah, scalp futures. Just coming down to challenge those lows. And obviously, that's really annoying, isn't it? Never mind. Also, couldn't you program a bot to just follow the largest orders as a scalper? No, because it doesn't work that way. And again, if it was that easy, that's what we would do, wouldn't it? Yeah. So the problem with a large order, right? Okay, let me just switch over to the futures platform quickly because there's a large order just come in. You see here, right? We've got these big red lines. Large orders. I mean, these aren't large orders because this is the Globex session, but this is a larger than normal order. That is a larger than normal order. These are larger than normal sell orders. What's happening? It's going down. Does that mean that the market is selling now? No, not necessarily. There's a 50-50 chance, again, that the order flow should now be bearish. Why? Because when I hit the sell button, think about what happens when you're in a trade. If I'd gone long, let me do it. If I go long here, right, what have I got to do to exit my position? I've got to sell. So are these orders coming in now, people exiting their long positions because they are wrong? Or is it people taking profit? Or is it people going short speculatively because they're expecting a larger move to the downside? Don't know. It's going to be one of two things, up or down. Just because there's a large order come in, that doesn't mean that is a seller. That could be somebody here that bought, exiting their long position because they were expecting that. They were expecting that to happen. And what actually happened when they went long was it came back down. So that is this order here for 45 contracts. That was the guy that entered 45 contracts long there, exiting 45 contracts short. Doesn't mean he's a seller. He's just got out of a buy position. That is a new low. White is new low. So that is large volume at low of day. So this is telling me now there is a load of selling coming in. But what happens after a load of selling? Buying. Why? Because everybody that's sold has to exit their position to take a profit and become a buyer. So if I hit the buy button now, here, I'm going to bring my average down to there, expecting some of these sellers now to exit those positions at some point in this propulsion gap. That propulsion gap is around about the 4,000. Oh, sorry, I'm trading. That's the ES chart. This is the NASDAQ chart. This is what I should be looking at. But it's the same thing. You know, they do the same thing in Globex. Doesn't matter which one you use. So I would be expecting this to trade somewhere between now 11,976 and 11,805, which is somewhere between there and here. Yeah. So I reckon this will trade back up into that zone. So this is what we call the value area low, these green bits. So this is outside of the largest distribution, and think of this as a bell curve chart. On any given day, there is a 80% distribution of orders and a 20% distribution of orders. The vast majority of them happen in that 80%, which is this purple area. Price, when it gets out into the 20%, is what we call price discovery. Either the market finds support here or it comes back into the value area, which is here. Yeah, so now we're trading back into this area, which I said we would go into. And now it gives me an opportunity to get out of my order with a $4 profit. But everybody, and you, as you quite rightly said, everybody's selling. But you have to understand what's going on under the hood. That's not necessarily everybody selling. That's everybody that's bought today puking, exiting their buy orders at a loss by getting out. Now there's no sellers left, so the buyers can take control again. I don't know. One of those two things is going to happen next. Either these guys will find support and everyone will jump on board with them, or they won't. This only gives me 50% of the information. It tells me there's a load of sell orders, but it doesn't tell me whether they were buyers exiting or whether they were sellers entering. That you never know. You can't tell. You know what I mean? There's no advantage to having, there is advantages to having volume profile, but it's just another strategy, the same as any other strategy you will trade. They're different strategies. This is just another way to trade the market. It's not easier or more difficult than anything else, but it has the same odds as everything else when you hit the button. But you need to understand, right? So I got in with a position long, I was wrong. So I found an exit by averaging into an escape. So I didn't lose any money on my losing position. That's the sort of thing you can do at tick level, because this is algorithmic execution down here. This is the bots. So these orders you're seeing executed here, this little yellow line, these are bots. Let me turn on, let me turn the circle tuner on. Let's go. Let's go to 1. Right, so all of these here, these little circles, these are bot orders. Let me turn it down as well to... Wrong way. There we go. So you are seeing individual orders being entered into the market. We know there's a massive what up here. Call it what you like. Smart money traders. That's is it supply or demand? I don't know. So much I know about it. I don't know which one's supply and which one's demand. It's the one at the top. Demand? Supply? I don't know. That's a supply and demand zone. Why? Because it's at resistance. There's another supply and demand zone. These are large order executions. So these are large buy orders. That is a large sell order. This, every tick, is algorithmic purchasing and retail and institution. We're all in it doing the same thing. But when you get a big one of these, that is caused by nobody but an institution, because we haven't got pockets big enough to make these bubbles appear. I could make a bubble appear, but I'm going to have to enter a couple of 100 contracts. I haven't got a couple of 100 contracts. I haven't got the money in the bank. You need 500. I think it's $500 per contract. So if you want to enter 100 contracts short, you need a $50,000 futures account just to enter one trade. But yeah, that's what's going on under the hood. When you're seeing your little candlesticks jumping up and down. And this is human beings. People. I aim for 50% success rate with a 1-3 or 1-5 ratio. Yeah, if you can get it. The thing you got to, the problem with risk reward is that people use it in the wrong way. What people do is they enter a trade with a risk and they take their TP at the reward. So you'll have a 1-3 risk reward. There's an inherent problem with entering your trades like that and planning your trades like that. Here is yesterday's high, and here is last week's high. Your TP is outside of both of those areas, right? The chances of the market actually getting anywhere near it are virtually none, because it's got to get through yesterday's high, where there's going to be hundreds of limit orders. There they are. There you can see them right there in the market. These are limit orders sitting at the high. There's a load of limit orders sitting at yesterday's high. When we get to these levels, it's highly likely it's going to do that. So why set a 3-to-1 TP? You're never going to achieve it. The way to use risk reward is not to set targets using risk reward. It's to enter positions and exit positions at areas that make logical sense, and then look at your profitability and your P&L over a last day, week, or month, and see what your risk reward is. Risk reward is not a control for exiting positions. Risk reward is what you achieve when you're trading. And again, they teach you, and this is why everybody fails, because they teach you to go, oh, well, I'm going to get in and I'm going to go for a 1 to 5 on this. Why? Why would the market give you 1 to 5? It hasn't got a clue who you are. It doesn't know your trade exists. Why is it going to go 5? I reckon it's going to go 1 to 0.5 and then slam down and take out your thing, because I've seen a massive resistance. Just because you've done this doesn't mean you're going to get that. That is just nothing. When you take 50 trades and you look at your P&L, you'll see what your risk and reward is. Your risk and reward is controlled by the market, not by you. If you set your risk and reward, you will fail most of the time. That's what people do. If you've got a small risk reward, that's absolutely fine. Yeah, so you can set up, I mean, I've got a 1632, for example. So if I go short with a 1632, pop, there's my 1632. I've gone long rather with a 1632. So that's a 16 tick stop, a 32 tick buy. But, you know, where I've placed my order is with all these guys here, just coincidentally. 32 contracts sitting there. But if there's a massive block of orders sitting here, I'm not going to get that, because I'm not going to get through that block of orders, am I? So that 1632 doesn't work in this case. It might work in other cases, but in this one it doesn't. I will get in and I will do that, right? Because why take a 3? Why take a 2 to 1 when I can get a 20 to 1? Do I know right now where this is going? No. I know it's going here because I can see the liquidity. There's a high probability we're going there. When it gets there, what's it going to do? Flush through to the high of the day? I don't know. But why take that when I can get that? What you should be doing is that. When you get here, we're either going to do that or we're going to do that. I'm going to add another position because I think we're going there. So I'm going to make twice as much money and I'm going to let it run 5 times longer. But I'm not setting a target. I'll get what I get. I haven't got control over what I get, have I? I know we've got buyers on side at the moment. So got a good chance. Break even, can't lose. So the worst case scenario now is I can win somewhere in the region of $150 if we hit higher day, or I go break even. But that's got nothing to do with my risk and reward on this trade. I don't have a risk and reward. I had a risk of a dollar amount. I now have no risk of a dollar amount. My reward is going to be wherever this thing goes. If this thing goes flying through the sky today and we get the biggest bull candle you've ever seen in your life, I'm not going to be working for the rest of this week. Why limit my upside? I limit my downside, but my upside is what the market will allow me to have. Which is why the the opening range breakout strategy that I'm working on is so effective, because there is no upside limit. It uses a trailing stop. So if something wants to go into a trend all day and put in 300% ADR, I will take 300% ADR in profit. I'm not going to go and take a 3 to 1 because why? I could have had 300 ADR. You know, it's just there's no point in limiting your upside. Limit your downside, but don't limit your upside. You know, news. Look at news, right? Pop. That thing will go nuts. It will go flying up there in news. It will go flying down there. I made $1,200 yesterday. Look, my P&L yesterday. Right. Over $1,000 of that was one trade. What time do you think I took it? Why do you think I made $1,000? Nothing to do with an entry of a $200 loss and a $400 or $500 or $600 target. I took a trade because I was expecting a bullish move on the US, which meant that the indices would tank. I hit the sell button 10 minutes before, I added to the position, and then the thing flew down like a crazy thing, and I just hit the flat button to get out of the position. I had no idea what I'd made. I just saw this thing go through the floor, and I got out because I needed to pass the evaluation. I should have let it run. I would have made a lot more, but that's the reason for the trade. I had no idea whether that was going to come out as red or green, but I knew that I could make a load of money. If I'd have set a TP of 3 to 1 on it, I'd have made $600. I made double that because I didn't set a TP. But I maximum I would have lost with $200 plus slippage. I would have got slipped on it because it's news. But so just be careful with risk reward. There you go. Rejection at the lows. So, you know, remember what I was talking about? When I entered this trade, I said, I think we're probably going to come down to here today. I didn't know anything, but yeah. Entries are not done so blindly. I do analyze. Yeah. You've obviously got to do analysis. You've got to have a strategy. So you gambled. Well, that's a good point. Yeah, I did gamble. Yeah. What? And again, I'll ask the question, right? When you hit that button, what are you doing? Call it what you like. I don't care if you call it gambling. Every time you hit the buy button, every time my friend working in Barclays dropped 20,000 contracts long or short, he was gambling on the fact that the price of that institutional stock was going to go up or down. Speculating, gambling, guessing, crystal balling, call it what the hell you like. You've got more chance of being a gambler in a casino as you have in this market right now. Because when I hit the buy button now, because we're coming off of a double bottom bounce, right? I'm gambling as this goes up. I'm speculating that this goes up. I'm anticipating that this goes up. When that news event came out, I was anticipating on it going down. I was gambling on it going down. What do you want to call it? Do what you like. Call it whatever you want. At the end of the day, it's exactly the same thing, isn't it? You're pressing a button, you're putting money in there, and you're expecting a return. It's a gamble. I'm going to bet on the England match on Saturday. I've no idea who's going to win. I'm going to bet on England winning. I'm speculating. I'm gambling. I don't know the outcome. You don't know the outcome of this trade. This trade is either going to not win or it is going to win. Listen to the terminology. Win, lose, make profit, lose profit, increase my bank account, decrease my bank account. It's a term, it's a word. You're a human. I'm a human. Yeah, I gambled. But that's what everybody does. Aussie, New Zealand, right? The banks were gambling on the Aussie interest rate. Here, we go back. The banks were gambling on the interest rate being positive when the New Zealand dollar released their interest rates in October. They didn't. The gamble didn't pay off. I don't care what terminology you use. You're a gambler. I'm a gambler. The real gamblers are the people that risk 5% of their account trying to get a Lamborghini with a $500 account. Those are gamblers. I'm not a gambler because my risk is 0.25% of my account when I'm trading. That's not a gamble. That's a calculated risk. But yeah, I am gambling still. So, you know, it's terminology. It's so overcomplicated. All of this is just so overcomplicated. It's really, really easy. I use a lot of instruments and a lot of indicators to help me identify entry points to gamble on the market with. Analysis is just analysis is just a way of picking your gambling point. It's the same thing. It's all the same stuff. I bet on the market going up. I bet on the market going down. It's a business. Every business is a gamble, isn't it? You set up a coffee shop on a high street. It's a gamble as to whether or not there's enough footfall that comes past this week. But I get what you mean by gambling. If they gamble in the banks, they are not making the market. Market makers have got nothing to do with gambling. Market makers make the market. They are not market making desks are not speculative. Market making desks are there to execute and provide liquidity. They are liquidity providers. They don't speculative. They're not speculative desks. Go and Astro. I suggest go and watch Anton Krill's videos. If you want to know about the mechanics of the market, he's probably best placed because he spent a lot of time there to tell you what goes on under the hood. They are dealers, not market makers. No, I'm sorry, you obviously know more than I do, so I'm going to shut up. Yes, there are no certainties, only probabilities. Exactly, Chris. It's 50-50. But the chances of, we talk about chances, and this is what analysis is. Analysis is trying to give you an edge, and your edge is based on the probabilities, and your probabilities are based on historical data. So we know there's a higher probability of a support and resistance, of a previous resistance or support becoming a future resistance or support. So that taking trades at that level only gives us a better edge, a better probability. We don't know what's going to happen, obviously, but it increases your probabilities of something happening. So, and this is why I say, whenever you see a range, so what's that massive ranger at the moment? What was ranging at the moment? Something was massively ranging. I saw, maybe it was on a lower time frame. Anyway, but in a range, yeah, it's not a very good range. What was ranging? Something was massively ranging. I'm sure it was a New Zealand pair. That's pretty rangy. But yeah, so one of the videos I've got on YouTube is about taking trades at logical areas that make sense. So when you've got an established range, taking a trade here is a gamble with an edge of 50-50. Because we have an established area that we know we've had historical retracements from, taking a trade long here gives you a higher probability, an edge. That's all it is. So this is a system. This is a strategy. This is what trading a system or trading technically is. Technical traders do this. Fundamental traders don't care about technicals. Scalpers couldn't give a monkeys about anything. You hit the button and you hope. That's basically what the three styles of trading are, isn't it? And when you are, in whichever of those, you are either a trend trader or you're a mean reversion trader. There's only two styles of trading. So you just combine it all together to give yourself a reason to get into a trade. So if we were to hit 150 ADR today, I would hit the long button. Although fundamentally I'm short, so I'd much rather we hit 100 ADR today. I would love to hit the short button there. But right now, it's just sitting in the middle. So if you're hitting the short button now, you're gambling. You're gambling on a 50-50. If you're hitting the button up there, you're probably gambling on a 60-40 or a 70-30. Either way, you're going to win some and lose some. There are no certainties, only probabilities. To be fair, it can be more or less than 50%. What can? Right, so what you're talking about is odds of success or failure. Your odds of, right, so when you hit the button, a load of buy orders just came in. There you go. The reason I said that was because I just saw them. Okay, so that trade I took at the bottom here, look, yeah. Reason for the trade was that. Now, was that a liquidity run? We just saw, didn't we, on the charts when I was on the futures platform, we just saw all those sell orders coming in. So a load of people hit the sell button there because they jumped on board with all those sellers. Where did they put their stop? If they're trading 5 minute, there or there. They're all liquidated now. So what's got to happen now is when we hit these levels is everybody that's sold short there has to hit the buy button, which causes that. So all these buy orders that just came in right now, yeah, are they people buying to go long, or are they people puking and exiting their short orders with a loss? Don't know. So what's going to happen next? Don't know. You'll have two futures traders seeing exactly the same thing that I'm seeing now, and they will both go in a different direction. This is why the market goes up and down. Analysis gives you more probability, yeah. But coming back to your 50-50. So whenever you hit the buy or the sell button, when I hit the buy button there, I had a 50-50 chance of price moving in my direction, right? So the 50-50 chance of the trade actually working is not based on whether it goes in my direction. Obviously, that's part of it, but it's based on where I get out. So if I set my TP here, the odds of my trade working are less because it's got to get through the cash balance open there. It's got to get through whatever you want that to be, depending on who you're trading with, what you're doing. That's either a liquidity run, a smart money concept, or whatever. It's got to get through all of that. And it's also got to get through high of the day where there's going to be a ton of limit orders sitting, as there was here, to go long. So if I set my TP there, the odds are probably 20%, 30%. If I set my TP here, or I'd set my TP in the propulsion gap, which is the obvious place to take profit, my odds are actually 60, 70%, I would say. So your odds are not determined by what happens next. Your odds are determined by where you think you're going to get out. There's a massive difference between taking a profit here and here. The sensible thing to do, and what a profitable trader would do, is break even this and let the market try and get a big runner. Let's see if we can get 1 or 2% out of it rather than taking 0.3. If this now does this, I would add another position, because where are we going? If we pull back and break a high again, the likelihood is we're going to come and try and retest the highs. We're going to see if there's more buyers in the market than there are limit orders sitting at that level. If there are, we'll get a breakout. If there aren't, we'll get a rejection, as we did here. So there's more limit orders sitting there than there was selling volume. That's why it's doing this. No other reason whatsoever. There was 100 limit orders long, and there were 50 short orders. That's why that went up like that, for no other reason than this number is bigger than that number. There is nothing else that drives the market apart from mathematical mechanics of how many people are doing that and that. And again, brings me back to my point at the beginning of this rant that we've gone into, which is a really good one. But what's going to happen next has got nothing to do with that candle. I have no idea how many people are now going to hit that button or that button. But I do know that that is a high probability point of return if this candle does something like this. Because we're going to have what? A propulsion gap. Magnet for buyers. I don't know. But they are dealers, not market makers. They deal in liquidity. Market makers are dealers, liquidity providers. They make the market by moving it using liquidity. Go and watch, I don't want to go into the complexities. You don't need to know. It doesn't matter. It really doesn't matter. Euro odd. Seymour, you want to look at Euro odd? So nice rejection up at the highs. So we just had a reversal alert, retest, and it's dropping at the moment. ADR target. So again, support, resistance, breakthrough, support, bounce. So logical target is either going to be Asian low or 100% ADR to the downside. So again, if you're getting short here, you set your risk there. You're going to get in with a 54 pip stop, right? If you're going to target a 3-to-1, you need to be 150, right? You're not going to achieve that today unless we get a 125 ADR break, which is going to be quite a long way to go with no news catalysts. And the Aussie dollar has just had an interest rate rise. So, and it's done ADR. So there's no liquidity for Aussie at the moment. So there's no point in getting into that trade now if you're trading intraday looking for a 3-to-1 risk reward, is there? But yeah, you get a 2-to-1, no problem. So take the 2-to-1 because there's a high probability that's working out. If you want to be super scalpy, take a 1-to-1. I would give that a 70% chance of being achieved if the sellers take control. But what you get is entirely up to you. When you get to there, if you see it slam and then do that, break even, add another one, and then target the next level. Why? Because this level's broken. So add to the position. Take twice as much profit. Don't take, this is what everybody does. Or take a partial. So you've only got half as much running. No, you've won. You're winning. You've got it right. Add. Put more money in. You're right. Why get out with half your position? This is the thing that I used to do it because I was taught it, and it's wrong. If you've got a trade that's working, don't get out of the trade with half of the money. Put more money in because you're right. How many times do you get into a trade and it goes out and stops you out? You finally get one that works, and your first instinct is to get out. You're right. You've done it right. You know those last 3 that you got it wrong? You got it right this time. Brilliant. Get some more money on the table because you're right. Protect that with a break even. Add a bit more. Make some money. Don't get out. Get in. If you're scalping, any trade, if you're swinging, right? You know, if you're going to get in here now, you stop there. If it breaks that level, pending, enter, second position. If we get to ADR and it accumulates, add another position under there. If it breaks short, happy days, we're off with 3 positions. What the world and his wife wants to do is when it gets down to there, they either want to move stop to break even so they get stopped out before the move starts and then they get cross, or they want to take half of their position off and move the rest to break even so they only make a 0.5 reward. The next trade that gives you a 1 loss, you're now chasing losses. It's all done wrong. Everybody just does it wrong. But that's not our problem, is it? It's because that's what everybody teaches us. Why? Because their brokers do most of the courses, and the brokers' incentive is to get us to hit the button because they earn a spread and a commission when we do that. They don't care if we're right or wrong. In fact, they do. They care if we're wrong because they usually take the other side of our trades. That's another story. And again, got a video about that. Why do banks deal with multiple symbols and not just trade one? Because they have to make liquidity in the market and they have to execute orders across the instruments that they are told to execute orders across. So if you're banks have complex things. I don't want to labor the point, but there's not one. The banks just don't have one desk. They have multiple desks and each desk has a purpose. So you'll have one desk that will deal with pension transactions. You'll have, and that pension transactions will be across commodities, across stocks, across Forex, across all sorts of things. You'll have market maker desks or liquidity desks. You'll have a liquidity provider desk. You'll have speculative desks. You have prop desks. So there's all sorts of stuff going on in a bank. And they're all doing different things and they need different instruments to do that. You've got the mortgage desk. The mortgage desk will have hedges running against its mortgages that it's offering, mainly against interest rates, bond purchases. So they will be offering out interest rates at one level and they will be hedging on the interest rates changing on another level, on another account. It's infinitely complex. You don't need to know about everything that goes on. There's just no point. As I've just demonstrated, doesn't matter. I hit the buy button. It went up. I've got a trading stop and I'm going to make a profit on this if I get stopped out. But look where it's coming. Where did I say it was going to come back to? The propulsion gap. Why? Because that's what it does. Now everybody that bought is going to add to their positions and drive this higher. So we're going to break that high. So what should we be doing now? Adding. Because if I'm right, and I might not be, I don't know. Because again, I've no idea where it's going. But if I'm right, it's going to come up and retest the highs. So I'm going to add one and make twice as much money as I'm right. If I'm wrong, it's going to come back down and I'm going to make 0.1% or something. Well, here is my stop, which it just missed. Capiche? Understand? Makes sense? But you've got to have a system and a strategy, because you need to be able to replicate what you do to make sure that what you do is working. If what you do doesn't work, you're replicating something that doesn't work. You're going to replicate the losses. So you have to have a system or a strategy, and this is where our indicators come in. Yeah, whether you're using the market reversal alert indicator, ADR, a moving average, Bollinger Bands, whatever you're using, you need to have something that says this is the time we press the button. But where it goes, nobody knows. It'd be nice if this one pops up to the highest today, because I shouldn't be manually trading this. This account, I said I was just going to trade this with the EA, and I'm getting into trading it because just I'm watching it, I'm just seeing stuff and I'm watching it and I want to trade it. I shouldn't be trading it on this account. I should be trading it on my other account. What's the Aussie done? Before I disappear, I just want to see what the Aussie's up to. Right, so the Aussie's pulling back again. Propulsion. So this is the Aussie rate announcement here. That is the break of accumulation. So this is our propulsion gap. We've just tapped it and rejected for the first time, so that's good. So if we get a bullish move out of here, I would say we're probably today just going to go into rotation during New York. We'll see. But obviously, if it comes back down into this area, what we're looking for is buyers that caused this candle to step in and add to their positions to drive this higher. So we're looking for speculative buying on interest rate rises on the Aussie. So we want the market to agree with that theory today by keeping us in a bull candle. So today we want to see a bull candle. If we don't see a bull candle today, there may be more selling pressure coming forth. We will see. Mental structure as well as market structure. Yeah, mental structure is and that's why I teach the boot camp, because mental structure is the most difficult thing. Stopped out on that position, so I'm just going to cancel that pending. So yeah, mental structure is the most difficult thing, and most of us will never be able to get on top of that. So if you remove that from the equation, suddenly you become profitable, which is what the position trading is all about. Giving yourself an edge at an extreme without having to worry about what happens next, and just see the market move, see the market, get in and just see what the market does and see how it moves up and down. And then you will time, after a while, you will start to time your entries better. Let me look at my entries. Some of my entries are awful. Do I care? No. As long as the structure stays, as long as it keeps going up and down, as long as there's human beings pressing buy and sell buttons, it will go up and it will go down. As long as I get my average into an area which is achievable, which you can measure with the ADR, you're going to be okay. Unless you get into a massive squeeze that never ends for some fundamental reason, i.e. if the Aussie rates had come out as a negative today, yeah, I'd be taking loss on some of that. But they didn't, because the Aussies aren't going to let it happen, because the Aussies are getting hammered. That's why banks change rates, control their currency, control their economy, control their value, control their worth for trading with. That's what it's all about. Just been looking at Euro odd, just entered off an imbalance. On 15, I guess. Yeah, that's a good trade. So you got the fundamentals on your side. Aussie dollar long. Euros are long as well, but obviously Aussies are longer today. because it's just had its rate. So there'll be more interest in buying the Aussie today. So that's good. And again, target, if you're scalping on that. Yeah. So, if you got in on that short, it's if the market's think, like I keep saying, think into the future, visualize high, low, lower high, visualize the lower low, visualize the pullback to a lower high, visualize hitting that level, adjust your stops accordingly, right? If you've got in here, don't put your stop, if wherever your stop is, if you have got a stop, obviously. If you position trade, you haven't got one, so it doesn't matter. You're not going to get stopped out. You're just going to win. But if you're using a stop, visualize, right, that high there. If this market structure holds, that high there is not going to get invalidated. So you are safe there, because if that does get invalidated, your idea hasn't worked. Invalid. But reduce your risk. But don't go break even, because there is a high probability that they could pull back all the way up to here and then go down. Yeah. Market structure doesn't pull back in exact fib levels. I mean, it does sometimes it doesn't. So if it invalidates that, you're wrong. That's why your stop goes, moves from there to there. And at some point, and this is, keep adding. Yeah, so add there. Your stop will go above there. So you'll have two stops there now. And as it pushes down there, add there. Move all your stops down to there. It does that and that. Add there. Move all your stops down to there. At some point, it's going to come back and it's going to take out all your stops. That is the point of a market structure break. That is what the indicator is going to show you, that structure is now shifted the other way. But as long as that is doing that, you keep adding until it doesn't. Then you get out. But don't go, I'm getting in here with a 2-to-1. Get out when the market starts going the other way. Look at the Aussie New Zealand. Hourly's probably best. I mean, if you got in here with a 3-to-1 risk reward, how gutted are you? All that you could have had. But now I'm going to take my 3-to-1. But that's the thing, it's the same. It's the old analogy, isn't it? Cut your losers short, let your winners run. But it's true. Let your winners run. Don't let your winners run, though. Add to your winners. If you're winning, add. It's totally against our instinct to do it, but that's what you need to do. That's the best thing to do if you can. But protect your capital at the same time, obviously. I wonder why the phenomenon of support and resistance exists over all time frames. Exactly the reasons I've just been saying. Because the market is driven by human beings. So the banks will have, so this is why ADR exists. So ADR exists because the banks, because of just a mechanical reason, that the banks can only really execute a certain amount of orders in a day, because there's only a certain amount of time in a day. There's only a certain amount of people wanting to take the opposite sides of trades in a day. So market movement will only usually move a certain amount a day. And the average daily range of the ADR is what we stick within 60% of the time. So that's basically the theory of why the market moves up and down. Support and resistance is because the market will call levels to earn an amount. So when we wake up in Asia, the guy passes over to London and says, if you take it down today because we're short bias, if you can achieve, I don't know, 69,400, we'll get out with 2.4 mil, whatever. I'm making all the numbers up and the numbers of where we're going. But that's what basically he will do. Take it to a level. We'll come back up And as the market's reacted from that level, anybody in the future that is speculative long will be looking for a pullback entry. So they will place limit orders at support and resistance. So your limit orders, you have a volume of limit orders triggering at the same time, which causes that. Human beings go, market's going up, we'll buy it. They cause more of that. Yeah, that's why you get the same level there reacting, because that's what happened last time. People see that happening, they expect it to happen again. It's humans. It's us. It's not us, it's the banks. And again, this is what I say, you know, when people said things like what we got said today, which started all this conversation, the bloke that caused this here, the bloke that caused that was just a guy in an institution, bank, or whatever it may be, executing a large order. When it got back to here, he needed to execute more of his large orders, so he did so. And as he did so, other people saw it happen and jumped on board as well with him, helping him along his way. But that was caused by limit orders triggering at a level because they want to defend that level. That is the whole premise behind the propulsion gap. This propulsion gap that broke this low, we came up into it again, and the guys that caused that sold again. They came up again, and the guys that caused that sold again. We came up again, and the guy that caused that sold again. So then the market went, all right, we can't go higher. We'll go lower. He won. I don't know who he is or what he represents, and it doesn't matter. That's what happens in institutions. And this is why this whole wide range bar theory works. It's large order execution. This could have been a hedge transaction. It could have been a speculative short. It could have been a piece of news. An analyst gave a scorecard change and they wanted to flip short. You don't know. You have no idea, and it doesn't matter. What matters is it happened. And the reason it happened again is because he either wanted it to happen again, or everybody saw what he did and speculatively jumped on board with him. But the reason it happened was because there were 2.4 short and 1.9 long. These guys lost. That's the real reason it happened, because there was more of those than there was those. That's it. It's that easy. It's not obviously that easy, but that's how easy the market moves. That's all it is. And it happens on all time frames for the same reason. Yeah. Why did that bounce? Because it did before. Why did that bounce? Because it did before. Because when that happened, that was a news event, right? So when we missed this move, we put our orders down here. We place buy orders here because this is where we moved from last time. So these buy orders, it's just a massive volume of orders triggering because everybody wants to get in on the action. It's a human thing. We want to be in, right? And we pushed it up. So these guys who made that happen, right? Everybody that missed that and saw that got an opportunity to get in there. And that's where it really went. Because there's limits. There's limit orders. That's why market structure works. It's people that are selling, taking profit, selling more, taking profit, selling more, taking profit, selling more, until there's not enough people to sell to. So they get out and they buy. Thoughts on GJ? Short everything yen, especially the pound. Pound's short at the moment. Again, thoughts on GJ? You've missed it. Textbook. Support resistance. Look at it. Why did these orders all trigger here? Because they did last time. Nothing else. So somebody got in with a speculative short limit order and a stop. They either won it or they didn't. It's just there's a lot of them got in there, so that's why that came off. It didn't work. But then we broke above the high and we came back down to it and everyone went, well, last time we were here, there was a load of orders transacted. So let's go limit long there because we just broke long. Hang on a minute. We added to a long position. All right, we'll puke. Bang. I make it sound like it's a person. It's not. It's thousands of people working in large institutions executing hundreds of thousands. $6.8 trillion a day goes through this market. It's a huge amount. We are just we are an amoeba sitting on a fish inside a whale's stomach at the bottom of the ocean we've never seen. That's how insignificant we are and how much control we have over this. Just not even on the scale. What should my targets? I'm sorry. How different will the new EA be from the Price Action Toolkit? It's not much different at all. It's got one more level of breaking in it, and it's just all it does is opening range breakouts. It doesn't do any. There's no buttons or anything. It's just it's a totally separate thing, but it's simplified. So we've got a break even. I mean, I'm not even going to use the break even. My analysis and all my back testing has shown that the break even stop makes very little difference. But it's basically the same, except we've got 3 levels of breakout. So instead of taking an opening range 1 and an opening range 2, there is an opening range 3, i.e. we do 5, 10 and 15 minute opening range breaks. But you could just use, to be honest, if you've got the Price Action Toolkit, nothing much has changed really. I just want it's a bit too complex, and I don't want to overload the Price Action Toolkit. So it's just going to be something that's literally just a set and forget type thing. It is going to be a set and forget. Set and forget, sit on a beach and drink a Mai Tai. What should my targets be? I think I've already answered that one, haven't I, Sam? Oh, that was Eurowide, wasn't it? Yeah. I mean, look at Eurowide on the 4 hour. Again, what should your target be? What time frame are you trading? If you're trading on M5 right now and you've entered a short, for example, Asian lows not far away, is it? Go to H4 and see where you are in the range. Yeah, where should your target be? 300 ADR away, 250 ADR from where you are now. Your target is totally dependent on your view of the market. Hourly, that's the 4 hour low that we just looked at. This is either going to work or it's not. If it does, it might do that. It might collapse. It might do that. And we might start a new leg up market structure. I haven't got a clue. That's really crap, isn't it? And this is why I think it works. This is why I make money, because 99% of the people out there teaching you to do something will tell you, when you do this, you do that, because this is what's going to happen. For some reason, they think they know where things are going, and they don't. Accept complete confusion, and you'll be all right. Embrace the chaos. I've sort of started adjusting stop loss in profit, trying to not give back anything to the market. I've noticed I had started adjusting a bit early once in profit. Right, so what you've just said there, trying not to give anything to the market. If you use a break even, because of the nature of market structure, there are instances like here. If you took a breakout short there, as it moved down, if you'd have gone break even stop, you see this wick on the next candle came all the way back up. you probably would have been all right in that case because there's a propulsion gap there. But a lot of the time, the very next candle will take you out. Because what we've got to do is when we've moved fast and hard, we then have to come back and see if this is actually a move to the downside and there are sellers to add on to the position, or if this was a profit take on a move that's gone long, in which case then we will continue that way. When you set a break-even stop, what you're doing is telling the market there's liquidity. Remember, I just showed you in here, yeah? The market can see your liquidity. Yeah, so they know where stuff is. So break-even stops very rarely help. When you've got confirmation that your breakout is actually successful, at that point, you're much safer moving to break-even. But I wouldn't move to break-even until I've got a real good distance away. And in that case, what I'll be then doing is looking for a pullback so that I can add more into the position. Yeah. Because I'm right. If I'm wrong, I'm wrong. I know, this, and this is part of position trading. People say all the time, why is it when I'm right, it happens so fast, and when I'm wrong, it seems to go on forever? Because you are going into drawdown because you're wrong on the position. So when you're wrong on a position, you usually know like that. So if I take a short or a long, I go long here, right? And I say I'm going to put the stop there. I'll know within 10 minutes if I'm right or wrong, because this thing I'm expecting to go long. If it doesn't, it's going to go down there. If it goes long, now what I've got to do now is decide, right, where am I going to get out? I'm right, but where are we going? I don't know where we're going. I don't really want to do this trade because I don't think the market is actually going long. I'm just going to close it because it's the proper count. But yeah, you don't know where it's going. So you're usually wrong straight away because what you're normally trying to do is buy against the stream, aren't you? So we buy pullbacks. So we're buying into that selling pressure. So we don't know whether that selling pressure is going to continue. So we get proved wrong very, very quickly. When we get a chance to be proven right, yeah, that is where we make our money. If you're using, I'm talking purely about stop loss strategies, nothing to do with position trading. Obviously, that's a totally different concept, theory, strategy, everything. But yeah, don't limit your upside, and don't and add when you're right. When you're right, and the market's proved you right, all it takes is a news item. If you get into a position. So when some Astro said I was gambling yesterday with that futures position, I wasn't gambling with that futures position yesterday in any way, shape, or form. I formed that position ahead of the news. So I got in with a short, the market moved down. The market moved up, I added. The market moved down. I broke even, stopped the whole position and waited for the news. The news went my way. Thank you very much. What was my risk? Nothing. Initial risk was $200. Break even risk at time of news was nothing because I added to the position. I could have broke even if I just had one on there, but that you're putting yourself in a position to make money, and you can only make money if the market is going to move violently in your direction. If I go long here and it goes like that for 2 hours, there's nothing I can do about it. I want the market I want to be right or I want to be wrong fast. And if I'm right, I can protect my risk and then sit and wait and see what happens. But you'll be wrong very, 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 very quickly most of the time when you're scalping or when you're trading any time frame really. It's just it takes longer and longer time frames. So, do I use limit orders a lot? I use pendings. So I use pending orders. I don't personally. I don't use limit orders. Whoops, cancel that. The reason being is you need deepish pockets. So this limit order, all the limit orders here, as you can see, they all fired within 5 minutes, and we're off. When you place a limit order, stop placement is very difficult because you don't know how deep it's going to go before you run out of liquidity to push back with. So what I prefer to see is that, and then I enter. But that's because I'm manually trading. If a lot of people do this, especially with futures. So with the futures market, what a lot of people will do is I do this myself. Sprinkle buys and sprinkle sells, right? So if we're going to get breakouts today at the New York Open, take it with you. Or the opposite. Set a limit order there and a buy order there, which is obviously that's the limit sell. So assume that we're going to come up at the New York Open, test the high of the Globex session, find a load of orders just like me sitting here, and then go. That's fine. But where do you put your stop? Yeah, you've got nothing here to help you, have you? So stop loss placement on limit orders is very hard. If, however, price pushes up at the New York Open and does that, I'll take a short there because I now have a stop placement. That's just me. That's the way I like to do it. But you could just get in here with a whatever stop, 30 points, 36 stop or something, or points or pips or whatever whatever you call it, whatever you're doing. And sometimes if the limit order works, you'll be okay. Other times it'll work and you won't be okay. Other times it'll blow through and you're off, and you'll be like, brilliant. But again, how could you know? How could anybody know? You can't. It's just not possible to know anything. So you have to pick one. So what happens when the Swiss was depegged from the euro? Everyone pressed the sell button. I don't know the mechanics of what happened then. I know I made $4,000. But then I know my broker went bust and it took me 6 months to get the money out. I was with Alpari at the time and they went bust. I don't know what happened there. I think I guess, yeah, all the institutions would have exited any long positions they had, which caused a selling fury. And obviously there would be no buyers available, which is why it dropped so fast. I mean, that was an unprecedented event. Yeah, I mean, the mechanics of that the Swiss franc cap, I haven't got it. I mean, if you visualize what happened, where are we? Yeah. So, I mean, look at the frenzy of buying that went on before it as well. So every institutional order entered since we got confirmation of a long. So any the amount of money sitting here long on this, which is shorting the Swiss franc, obviously every position was reversed when they found that information. So what they were all trying to do was reverse their positions, but of course everybody was reversing at the same time. So there was nobody left to take the opposite side of the trade. Yeah. So everybody in this room right now at that point was hitting the buy button. None of us were hitting the sell button. So who do you sell to? There isn't anybody. So you have to go and find the closest sell order, which, someone might be sitting there. So they all get filled wherever you can get them filled, and it will keep going and executing your orders until it fills you. And that's why the brokers went bankrupt, mine included, Alpari. They just couldn't fulfill the orders. It was chaos. Gone. Events like that are very, very, very rare. And this is why you trade with a broker with protection, as I was, thankfully. But yeah, what actually happened, mechanics under the hood, I've no idea. Just chaos. We had it before in I can't remember when it was, but the stock exchange on the CME, one of the bots went mental on the CME and suddenly started short selling everything. And it caused all the other bots to start short selling everything because they weren't ready for that. They had nothing in their algorithms as a precedent, and they all did the same thing, and the market collapsed. Stock market collapsed. They had to stop trading because there was just no one on the other side to take the orders. So everything started devaluing and collapsing. But, I know. Anyway, 11:30, guys. I've been on for 3.5 hours talking absolute rubbish. Trading, yeah, not making any money this morning either. So tricky market this morning. What was the first trading strategy you used when you first started, which you became profitable? It was the moving average shadow, PASR, price action at support and resistance. So yeah, this was my first profitable strategy. This is a really bad chart to demonstrate that. That's better. So when the shadow goes red, you sell, and you keep selling, 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 exit. That was my first strategy that made me profitable. Actually, it didn't make me profitable. It made me break even. It made me stop losing money. And it taught me to stay in the trade. There's no reason to get out of this. You get out when you cross the 72. And then you go long. And then you buy it. And you buy it again. And you buy it again. And you buy it again. And you buy it again until it crosses the 72 and you sell it. And then you sell it. And you sell it again. It's what's called an always in strategy. But I was trading on M5 and M15. And 4 hour. The reason it was called price action at support and resistance is because there is where you sold. Add. And these are also support. This is what we call dynamic support and resistance. Yeah, so this zone here is the dynamic support and resistance. And this is the solid or the fixed support and resistance. So you've got dynamic and fixed. And this is why I still use it today, because it works. Obviously, no one can deny it works. It doesn't work. It works. But these moving averages are very special because these are relative to the monthly and quarterly cycles that the banks and institutions use. So they are slightly more predictive as long as the fundamentals support it. When you get a fundamental shift, euro rate increase, that's when you find a trend change. That was my first profitable strategy. I say it was profitable. I did get profitable with it. But again, I found, this is the thing. I don't think there's a solution for it, but this is the thing. I found this. I started making money with it, and I was like, this is amazing. I wonder what's better. And I went off and I system hopped again from the thing that worked. And then I came back to it years later, and I'm like, you idiot. I just didn't know there's some gaps missing. There's some bits and pieces I didn't know that I needed to know. So I filled in the gaps, and then I came back to this and I was like, oh, now it all makes total sense. Light bulb moments. That's what the bootcamp is designed to do, is to give you those light bulb moments. Everything in that bootcamp, every indicator I use, is all the light bulb moments as indicators. And you use some or all, but they are all there for a reason, to tell you something, to demonstrate how something works and why it works. And you pick and choose what you like, what works for you. Yeah. Vera, gold. I think gold's a short. We just had a reversal at resistance. So at the moment, that is my anticipation. Accumulation. And I'm expecting US dollar strength to come off the back of interest rates next week. But obviously gold is its own entity, so it can wiggle around a lot. But I think I don't see any reason why we shouldn't continue to do what we're doing. Nothing's changed with the Russian export ban on oil, on gold and oil. They're screwed, aren't they? Nothing's changed there. We've had a weak US dollar, which obviously this has gone up because the US dollar has gone down, not because gold has increased. It's gone up because of US dollar weakness. So I'm anticipating that strength. So we should continue to the downside from there, I think. But I don't know. That's, again, the time frames. Gold today, long. Careful of that, but long it now. We're on a breakout. Or when we break that and below there and get a reversal alert, short it. Again, it's all down to time frame. Yeah. My thoughts on gold are bearish on a reversal alert there. Bullish because we've got a big gap here. But on H4, I'm overall bearish. So overall, I probably want to be looking at short entries. So I wouldn't really necessarily want to long that. I'd probably wait for the next reversal alert short on M15 or M5. If you're trading the hourly, that propulsion gap is where I'd be interested in getting in. Trading the daily, I'd wait for a bearish engulfing. Oh, sorry, we just had a bearish engulfing. That was a 4 hour. Yeah, if you're trading the 4 hour, I'd wait for a bearish engulfing. Or some kind of candlestick pattern to go short, because we've already got the reversal alert, and right now we are retesting. Appreciate it. Good talking. Yeah, I know it's a lot of waffle, but it's a lot of waffle. A lot of people don't know, so it makes sense. Makes sense to me anyway. I might be totally wrong on loads of stuff. I don't know. I don't care. Everybody's got an opinion. That's why the market goes up and down. Cable has given me pocket money for today. Cool. Good job. I haven't opened my pocket money yet. I'm going to have to wait till New York. Hopefully I'll earn it there. Right, so I've got to get on because I've got all this analysis to do on all of these spreadsheets. So I'm going to get on with that. It's going to take me a few days to get through all of it. But as soon as I have, I will report back and then hopefully get that EA finalized and sorted out. And it obviously, I'll be forward testing it. So, but at least we'll know all the results. We'll know all the drawdown possibilities. We'll know everything about it. So it'll be a solid strategy one way or the other. Whether it's right or wrong for you is obviously up to you to decide, but it works. Just need to make it as robust as possible for prop, because that's what I want to use it for. So, okay, guys, I've got to go. So I will leave you there. Anything you need, come in the Telegram group. I'll be in there. And as I say, no news today. So we haven't got to worry about anything else news-wise today. Tomorrow morning, we've got GDP. So if you're in Aussie positions, get your TPs ready. Fingers crossed we get positive there. We'll get more Aussie movement. Well, that's what I need anyway. And then I'll be getting out the Aussie. Then tomorrow afternoon is the big one. It's the Canadian rates. So that's hopefully going to bolster the CAD. And then obviously the rest of the week is a little bit meh until PPIs. So big day tomorrow for the Canadian dollar. But apart from that, we haven't got anything else to look at. So, all right, have a good one. I'll be back tomorrow morning, same time, 7:50. But I'll be in the Telegram group if you need anything. And I'll see you then. Have a good day.